Please tell me the public stream works this morning. Having some issues running 2 streams. We'll find out. We were having some issues yesterday with Streamlabs, thinking that one microphone was another microphone from a different setup. We'll find out this morning. Check 1, 2, mic check. Excuse me. I'm still not getting over this thing they set down my throat. Ugh. Ugh. Check 1, 2, mic check. What else we got going on here? It's SPX. Island in the sky, baby. We should be right up there at 5,700. Talked about Gamma yesterday. A nice trade up, nice trade down. To the end of the day trade. Right now. Let's do it. 9 fucking minutes. Let's do it. I want to get my fucking money. Give it to me. Good morning out there. Can you guys hear me this morning? Anyone tell me if you can hear me out there? You can hear me. Thank you, Robert M. Okay. So yesterday we is me. I moved over the second stream from a different office to this office. It's actually right back here. I don't know if you can see it, but it's there. I'll when you watch the second stream, you'll see this side of my office here. It's there though. I'll try to show it to you at some point. It's kind of cool. It's a pretty baller setup. I was thinking about it this morning. The computer itself is, I bought like a baseline gaming computer and then I rebuilt the inside. So it's pretty fucking badass. Sorry, I got a lot of I'm a little worked up this morning because I'm about to sell some calls here, and we took these calls from right around 4:13, 4:10. I think it was like right at the close. I think we actually it was like 4:14 when we fucking bought those things yesterday, and we'll talk about that trade. This morning. We got a lot to go over today. Today is actually a bigger day than you might think that it is. Second thing is, normally we sell the initial reaction off NFP about an hour into the show. No matter what the direction is, if it goes down, you buy it. If it goes up, you sell it. But I don't know about today. We'll talk about that today. There's also a possibility of a gap up into Monday. We'll talk more about this and talk about some mechanics too on like a gap up and then a sell on a Monday and or headline, not even just headline risk, but just risk going forward on weekends and stuff like that. We have a lot to go over. We have a lot of stuff that you should be like writing down this morning. If you want some free alpha, right? So we have a second stream. We gotta talk. We'll talk more about that too, possibly today if we have the time. If not, I have a bunch of stuff to go over. I got some input yesterday from the membership, but we'll have 2 streams. This stream is, in my view, one of the best out there. I'll be honest with you. I think it's one of the best. I was thinking about it 2 days ago, and then I talked to a few guys a day ago about it, and I talked to some people last night about it, and we're here all day long. We get a new squawker on. We cover all the events. We do the earnings. We do some stupid shit around here. So why that conversation came up was because of the second stream and what that would show, publicly or free or whatever. And then the companionship, all of it. It's pretty big. It's bigger than it seems. So that was kind of a good thing yesterday to go over with like Joe Donut and Bork and some other people. So we'll go over that today too. And we've got some stuff to look at. We got some stuff for some danger down the road we have to look at, and some price action stuff. And I apologize for yesterday with the stream not being up for free. We have issues, or I have issues with Streamlabs. It's like artifacting microphones. It's not my mic's not muted. I saw the people saying yesterday mic's muted. My mic's not muted. It's artifacts jumping back and forth between two Streamlabs. So I had to order a second line of internet today. These guys are coming over to put a second line in, not like a 5 gig line, but a whole new line because I don't know, or it's not because, but I think it's because it's on the same line. I'm having Streamlabs is having all kinds of problems. You got to do like a second Streamlabs account and new internet service and all kinds of stupid shit. So there's always like problems along the way to get this stuff done. It's always like one more problem, but we'll get there. 4 minutes left until the open here. We're going to talk about we have a lot to go over today is the point. Friday today is going to be a busy day. And we have a lot to get through. We have a lot of planning to do. We have a lot of stuff to talk about today that matters and is consequential next week. Consequential also for the month of May. And we need to go over that stuff. It's important. So anyways, good morning. I hope you're doing well. Looking for my new coffee right now.
Trump said to meet at the White House on Tuesday.
And let's get right to it, okay? So let's take a look at this really quick right now. Let's go to the trigger screen really quick. I don't like to brag, but I probably need to do more bragging. I don't brag at all. You guys think I brag, but I don't brag at all. I actually highlight my I spend a lot more time focusing on what I get wrong than what I get right. So here you go. I'll do a little bit of bragging this morning. This was your outlook from Wednesday. Your market brief from Wednesday, all the way up here. Boom.
Do you want to stay up to date with
No problem.
The bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth.
We pulled back yesterday
of 1 month and saved 92%.
We knew yesterday on stream that this move was not done going down. In stream yesterday, we talked about how this bottom down here, I was kind of stinky yesterday because I was trying to trade this up move after the bell. I wanted to trade that Amazon Apple up move, but we knew, we'd even said we never hit the downside target. Watch us hit it, and we spent all late afternoon sideways, and we're like, watch, we're going to hit that fucking thing. Like right at 415. And that's what we did. So it went the other direction, right? And it wasn't even other direction. It was in the expectations. And we hit it to the downside after the bell. And we satisfied what we needed to satisfy to then go to the next target to the upside, which is where we are right now. Which happens to also be above the weekly trigger as we open this morning. Now, there's a little bit more room this morning to go higher.
To go until we get the market on open imbalance.
To suck all of you in before we go down to actually close. To close next week, that gap you want to close. To stay in trend. Now, I'm not going to tell you the free member if this is exactly where we trade next week. Because there is a second possible outcome. I'll save that for the people that support this show. But there is another outcome where we just go higher. And we actually gap up.
Imbalance. S&P 500 buy side 779 million.
Hold on a second here. I gotta take care of this.
100 buy side 4 million. Dow 30 buy side 100.
Holy fucking shit!
And Mag 7 sell side 1.1 million.
Holy fuck! Sorry, I'm trying to get out of calls right now. Hold on. Can't believe that just happened. Hold on a second there, boys and girls. Whew. Okay. So over the weekend, some of you are going to say, well, what do we do here, Cap, right? Do we do the sweep lower over the weekend, then go higher above the weekly trigger? Or do we gap up over the weekend? And we went over this in yesterday's stream, what could be a possible outcome. And we'll go over that again later today. Possible outcome that does not allow that pullback and delays it until middle of the month. I'll give you an example of this. We went over this in the private stream yesterday. I'll give you an example of this right now, and let's talk about that really quick. I'm so fucking stoked right now. Hold on here. What am I doing here? We have to catch up the free audience today, boys. Right here. No, this is, history is never the same, but it can rhyme. What up, full-time student? It can rhyme. And I would draw your attention to the price action in 2022. Monthly trigger.
S&P 500 rises 1.2%, set to raise losses since April 2nd.
We recovered here. Now, as we recovered here, we came into the weekly trigger. And I really want to show you this right now. Actually, I want to show you two things here. I'm going to show you a couple things here if I can. More importantly is this one right here, I think. And this really is the more important one. So what I want to show you here is we hit the monthly trigger. You see the daily trigger swinging high right here. And what I want you to notice is that we had a gap up right here. We actually went above the weekly trigger. We pulled back down below the weekly trigger, which is what we're doing right now. Then we broke higher again rather than doing a pullback. And what's really important about this is the price action. I want to show it to you. It's an up, down, up, down, up, down move. Okay. If we're going to break above the weekly trigger, that's what it would look like. Something like that. Series of higher lows and an island in the sky that holds. And then a giant gap up. Now, what I really want to show you is what this means over here.
Chevron up 1.2% after Q1 results.
Voice news disconnected.
And some takeaways here. And this is the weekly trigger. Now, we might not do this exact trade, but we want to talk about rhyming. You know, history is never the same, but it rhymes. And there are some rules in here that matter regardless of outcome. Some rules that matter. If we break above the weekly trigger, there's some things we're looking for. What are we looking for? We're looking for a series of higher highs, higher lows, an island in the sky that holds, and matching up with what McGilligot said yesterday. And no matter what time frame you're working on, doesn't matter if it's a 1 minute chart, an hour chart, a daily chart, a weekly chart, doesn't matter. What really matters is on a daily basis, your prior highs you're trying to beat. Right? Did we get a higher high here? Did we get a higher high here? And I want to draw your attention to this in particular. This price action. You have the prior high, you have a new high, right? You have the prior high, you have the new high, right? So you're like, I got the higher high, I got the higher high. I come back down and even confirm the crossing of the daily and the weekly trigger successfully. Right? Nice bounce right there. But what happened? We closed this gap right here. Whoop. We bounced down. We closed the gap. Actually failed to close the gap and started dropping. Right there, you could have known that we were cooked. Because when you have these big major when you have these big major highs back here, the rule is that you have to return to the scene of the crime all the way up. I mean all the way. Even if it's a failure of all-time highs, you have to go all the way. You cannot stop. And on a daily basis, you have to respect all of these rules. Like these rules are permanent. So like even right here, when you had the successful bounce, the retest, you are required to automatically get that new high. And the moment that you fail, the run is done. It's done. And not only is it done, but you go all the way back down to the last major low. And I want to show you what that looks like when you get that failure. It is fucking gnarly. Woof. New market low. It is gnarly. And so I want you to think about, if we rejected the weekly trigger, could you have just waited? Even if we squeeze above the weekly trade or weekly trigger, could you have just waited? And I want you to think about the 3 different outcomes from here. We're going to go back and look at that right now. So I want you to remember all the rules that you learn on this show, time that we spend with you on this show. And we're in the same predicament right now. We're sitting on the weekly trigger. We have gaps to close to the downside still. And we have all of these major prior highs to take out, right? We've got this one right here, all-time highs. We've got this one right here, right? We've got this one right here, right? So we can posit a few things, can't we? We can, right? If we're looking for the hold over here, right? Higher highs, higher lows, island in the sky. We're also going to be looking for what? This, right? This. We're also going to be looking for the daily trigger if it crosses. We want to see any back test to be held and a new immediate new high, don't we? If we violate these rules, where are we going? Right? We're going downtown, aren't we? Go all the way down here, won't we? If we reject the weekly trigger, same thing, right? All the way down here, right? And we have a discussion that's going on right now, don't we? We have a discussion going on about what trade are we in. So let's talk about that trade. Yesterday, I read people saying we're in a bear market. We are not. We are not in a bear market. We are technically not in a bear market. We are not in a bear market. I need to warn you of that. This is not a bear market. This is not a bear market. Your first slice down in here is not a bear market. Not a bear market. Trend has always been the blue line. This is a bull market. Don't let anyone tell you that it's not. You can see it right here. This is an upward trend. It has not been violated. You can touch this as long as you go up. You can tick it if you want. When this is no longer a bull market is when you blast underneath the blue line and you make the new low under the monthly trigger. This is a bear market for any symbol. I don't care what the symbol is. If price goes under the blue line, the monthly trigger, and then catches a new low, it is in its bear market. That's the rule. That is the rule. There's no arguing with it. There's no negotiation in it. None. Zero. So we're not in a bear market, are we? The stock market is a forward-looking indicator. It shows you the future. We price in future. When we came into the beginning of the year, if you remember, if you want to watch the show, it was the February 14th stock market show, 10:30 in the morning. Our boy Pravorsky had told us earlier in the month, I'm going full bear. In late April or late February. We already knew on February 14th that's what? We were coming into seasonal weakness. We already knew that we were due for a major correction. We already knew that we would get Trump 2.0 tariffs, but not the second half of Trump tariffs. We didn't expect those until the second half of his presidency, did we? Neither did Wall Street, but we knew this was happening. We expected a trade down to the 60s and possibly at 70s and possibly 60s at worst. 70s, 60s. We figured that would be the major correction. We would correct and go higher. As Trump policy deteriorated from Trump 2.0 to let's super ramp years 3 and 4 of my presidency and do the depression trade early, we made the next leg down, didn't we? So we priced in a ton of that shit, didn't we? That was this leg right here. So we've done a lot of pricing in as it is already. Now, I would gander that even if we were to back up here and trade this again, if we can claw our way up, it's still a part of this trade. Now, the danger is if we go down here, we could start a depression trade. This would be midsummer. This would be September, October, and then where we're down there, it's fucked. And I'll show you examples of this. But if we're in a Wall Street right now is trying to tell you that we're in the recession trade. So if we're in the recession trade, I want to show you what that expectation is. If you think we're done here, if you're like, no cap, we're going to all-time highs, there's like only 2 or 3 outcomes here. One outcome would be we go higher, fail, right? We go right to all-time highs. We're done, right? That's it. Bull market, baby. Woohoo! All-time highs. That's outcome number 1. Outcome number 2 is what's being pushed, the narrative being pushed by Wall Street. And that's the recession trade. What that looks like is we trade higher and we fail this high right here. Right below, it's about 5,900, 6,000. We trade this one. We do the summer doldrums. We trade lower into September. Sweep this low right here. All right, actually something like that. Or sorry, hold on a second here. I'll fix this for you. Right there. Summer doldrums, right? They roll us down below the weekly trigger into like July, mid-July, late July, right? You go back up again, and then we sell into mid-September. Close that gap right here. That's mid-September. Consolidate. And then we get our best time of the year, mid-September to end of the year, and we actually make all-time highs. Right there. So this is trade number 2. Priced all the doom in, right? Fail all-time highs, 5,900, 6,000. Summer doldrums, blast down, end of summer. Suck ourselves back up right where the weekly trigger is. This weekly trigger comes up. Hold on. Right here, right? You can see it. Slam it down, close the gaps down here. Now, if you look at Larry Williams, he seems to think that our most strong part of this year is this trade up here. It's like violent. It actually goes up into, it's a little bit deeper. It goes up into like Jan, February, March. We get the all-time high, and then Wall Street would price in. If you believe Wall Street, we would price it. If we're moving forward the last 2 years of Trump's presidency to the first 2 years, you would then start the depression trade over here. It'd be a fucking mess. Outcome number 3. This is where shit gets really crazy. We break above. We catch that high right there. And then we have some kind of failure above here. We get the late May, no summer trade, sell in May, sell June, sell July. We go all the way down here. We beat that low. This is the ugly one. This is the Great Recession trade in 2008. This is the 1930s Depression trade. You get sucked down here. We come back up again. And once we get into September, October, we actually get real blood here. The scary part about this trade is all of these buyers here, everyone over here, all the retail, once they see that move down there, that second leg, this is called the second leg. We only get these very rarely. 2008, 2001, 1930, very rare. World War II was another example. And I want to show you what that looks like. But it's fairly ugly. It ends up becoming a trade that's more like this, wham, wham, and then down there. It's pretty vicious. So anyways, we'll talk about that today in more depth and detail. Let me show you what that looks like in 2008. Here it is right here. This is the second leg. There's the failure. Recovery, failure. And it just gets messier and really, really ugly. You know, Great Recession. Here is 2000. See that blue line? Why that blue line matters? See that blue line? Why that blue line matters? See that blue line? Why that blue line matters? See that blue line? Why that blue line matters? See that blue line? Why that blue line matters? Blue line. 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 Why that blue line matters? I want to show you the example in 1930. Blue line jumps above it, fails. Wham, 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 wham. Blue line. Why that blue line matters. I want to show you one more thing really quick if I can. Hold on here. Hold on here, guys. This is executive orders by president. I want to show you this for a reason here. What I really want to show you here is FDR. This was Reconstruction after after the Great Depression. What's more important here is the days from start of term. And I want to show you Hoover. Hoover made most of his important tariff decisions later in his presidency. And actually did more damage into the 1930s, into the exit of his presidency. Trump is well on his way here right now. There is one stark difference here. If we had the level of tariffs in 1920s, 1930s, it took almost 4 years to get to this level for Hoover. We are already there in 100 days. So 4 years, 100 days. It's brutal. Trump should continue on with this. If history is any representation, we have no other example of this. There's Trump's EOs. We have no other example of this in modern history. If you check tariff levels, people like to assign this to Trump. It's not Trump. It started with every modern president: Clinton, Obama, Bush's, then Trump. They've all been adding them tariffs against China. It's not just one of these presidents. None of them have rescinded any tariffs. They've modified them, but all these tariffs have stayed on cumulatively to this point right now. We know that they've been building factories since 2022, which means they made the decision during COVID. We have no other thing to go by here other than the fact that they've made full on all their promises. Financiers, CEOs, and all the presidents doing their bidding, right? And likely all of our politicians, no matter what they're telling us. So this is important here, isn't it? You might ask yourselves why they're doing this. The simplest reason is because the perpetual seeking of more profit. If we're going to switch to an economy where we don't need cheap labor anymore, if we're going to go to robotics and AI, then we don't need to be building products anywhere else but here. This is kind of critical, isn't it? Where we are right now is critical. If we're going to devalue and revalue the actual dollar, right? The value of the $1 bill that's at $1, but the value of the dollar underneath the dollar, we need to suck money out of the system too, don't we? That's why they hid money under mattresses, cash under mattresses. Hide it. We know there's a rat race going on right now too, don't we? We talked about this yesterday. Hold on here. Reload, baby. No, that's wrong. I got some funkiness going on over here on my end. I don't know why I'm getting a weird. Save that. Come on now. There we go. I don't know what's going on here. All right. I'm going to close that. And I'm still getting some wonkiness on my end. It's all right. Oh, baby. What's going on here this morning? I'm getting some weirdness. Hold on here. Give me a second here, boys and girls. Whoop. Sorry about that. So Let me try to simplify this because I see a lot of people don't seem to understand this. Let me explain some of this to you guys, okay? So we are in a trade war. We're not in a trade dispute. We're in open warfare with China. That's where we're at. I want you to know that these things take time. So you're going to see different things from our leadership, from the White House, from China. Once you're in a trade war, no one has to negotiate. China has no need to negotiate with us. You're going to see pumps and dumps and talk and negotiations and things like that. If you guys have read the Depression brief that I gave to you, it discusses where we're at. I want you to keep reading that brief every time you see a response from China, a response from the White House, a response from Besant, and then listen or read again what was told to you. I want you to think about the fact that this takes time as well. You're not going to see that whole trade in one day. I want you to think about. The process of changing your economy, and people have a hard time wrapping their heads around that. So the thesis here would be this: if we're going to bring manufacturing back to the United States or friendly nations, if we have a possibility of World War III along with it to pull us out of a depression or depression-like state, recession-like state, things like that, Great Recession 3.0, I don't know, 2.0 or whatever, or today's modern history is different than the 1930s. The complexity of what we've woven into a world economy takes time to destroy and time to rebuild. If you look at a motherboard in a computer, there's thousands of parts on it, doodads from around the world built for that motherboard. We have a very complex system in our world economy today, way more complex than you think. And one part being missing can bottleneck that whole production. I also want you to think about the dollar. And that's the hard one for people to understand. If we continue down this path unless something changes, and I also want you to think about this, we can have moments where Trump will say negotiations are going great with China. China can even say that. But if we stay on this track and nothing materially changes, which it looks like is true, still, even today, looks like it's true. There'll be dollars sucked out of the system would be the side that you guys don't see. It's kind of where, it's kind of like where, hold on a second here. It's hard to describe the people in ways, right? So you've got QT going on in the background from the Fed and from Treasury. And as they are revaluing the dollar, they're also sucking dollars out of the system. And I want to explain this better to you, if I can. So last few years, you've seen very wealthy people with piles of cash. These are VCs. These are private equity firms. These are very wealthy individuals. And we got you and I, right? We're plebs. We're the nobodies out there. And then we got these people with a lot of cash. Then we got banks. And then we got the government. Big boys, the Fed, right? Treasury. The White House, no matter what the politicians in there, doesn't matter. So I want you to think about this from this perspective. If we're going to change this dichotomy and this economy and that kind of stuff, what you will see happen materially to you is the money will become worth less in some ways and worth more in some ways. And so when they make these changes like this, what happens is this. If I was private equity and I had bazillions of dollars, and I had the inside line on what was going to take place, I would know two things. I would know that at some point the government is going to come after me with corporate taxes and suck all my money out of the system too. The way to escape a depression-esque era would be to have businesses that generate cash flow no matter what, even if I lost the value of buying that business. Make sense? So I would try to consume and absorb and corner markets. I already know that my money is going to get sucked out of my pocket, so it doesn't matter what I pay for those businesses now. And if I have most of them as they collapse, I can then suck those up too. So I would start a program right now, let's say, trying to buy all the veterinary clinics in the U.S. Make sense? As the Fed does their operations and they're taxing you, as companies are taxing you, right? Companies begin to tax you with higher inflation. The government starts to tax you, right? And then your local vet clinic or funeral home, you don't have the money to pay them, do you? And then eventually, if the government can't get the money from you out of the system, they go to the companies, right? They start sucking that money out of the system too, don't they? And you'll see the flights and fleeing to places to hide money, like gold. In the Great Depression, they stopped you from owning gold. They also did what? They had you turn your cash in multiple times for new bills so they could account for how much money you actually had in physical cash. And if you corner these markets, you consolidate wealth amongst the wealthiest. We made kings and titans of industry in the last depression. Hold on here. That same process we are in right now. Whether this continues or not, we're in the same process right now. And what matters to survive this economic change is having that cash flow. So if I piss all this money away, and I know that the end result is corporate taxes or even war to get us out of this depression, right? Or jobs for you through the government, that I consolidate all of this power in, let's say, funeral homes or veterinary clinics, things that you'll always need. Amazon right now is in a position to eat companies alive if they make the wrong decision here, aren't they? Even if we break this policy, who's buying the pencil right now? Who has to absorb 200%, 300% tariffs? These small companies that sell pencils, not Amazon, right? If we continue down this road and you stop wanting to buy pencils, that company is going to fold, right? If we break this policy that we're heading towards, which I don't think we're going to, and they're out there buying pencils, though, and tariffs drop back to normal levels, they're going to eat and implode, right? They're going to eat all those tariffs. A new seller is going to show up and say, I bought pencils with no tariffs. They're $1, not $3. That guy's going to go bankrupt in both scenarios, isn't he? That one seller, right? That one pencil guy gets fucked no matter what. If he buys the tariff pencils and you stop buying them or can't buy them, he's going to go bankrupt. If the policy reverts back, a new seller is going to come out with cheaper pencils, and that guy's still going to go bankrupt. And Amazon is sitting there waiting to absorb that guy in both scenarios. Amazon's in good positioning, aren't they? VCs in good positioning. Private equity in good positioning. They want to absorb as many of those companies right now as they can. So when you hear people say I stuff cash in the mattresses, there's a reason for that. Physical cash. You see gold mooning. It's herd money trying to escape. You see money moving to other countries, trying to escape what? A vacuum cleaner that's sucking up money from plebs and companies. What is king in those situations? If I'm a young guy and I go, okay, I got $100 and I can buy this company or I can pay it in taxes to Uncle Sam. Right? I can pay it in tax. And what governments do this to me? My local, my county, my state, my federal government. They crank taxes. Right? Who else tries to gouge me? Companies. Companies also know that if they can get to you before the government does, or all these governments, they'll tax you too, right? Because they know the Fed's ultimately coming for them too. So the longer they have cash flow, the better off they are, right? And eventually you have no more cash flow. And eventually when they come after the companies, the federal government comes after companies, they know the gig will be up too, right? Money's sucked out of the system. So if I have a dollar bill that's worth $1, and you think, I'll be fine, Cap. Not when they start sucking dollars out of the system, right? There's not as many dollars to go around. Why is there not as many dollars to go around? Because we need physical fucking dollars for the bond markets, right? That other countries, right, buy that debt. We don't have that debt anymore, do we? We're not going to be issuing all that debt, are we? We don't need those physical dollars anymore, do we? They're going to do anything they can to get it away from you. As a matter of fact, a story broke yesterday about DTE, the big energy company, big buybacks, big everything. They're not a public company. They're like a quasi-public private company. And guess what they proposed yesterday? They have huge, huge buybacks, huge dividends, filthy, filthy money going into the pockets of very wealthy people. Guess what they said yesterday? I think it was yesterday. Well, maybe we want to turn this company over to the people, not a private public entity any longer. And even the public-private entity benefited the private side of this company. This is a huge utility. And they all of a sudden come out and say, hey, you know what? Let's start the process of putting this back on the people. I.e. who? You and I and the government. Why? Why? Because they won't even survive as a public-private partnership. Dude, what is going on over here? I don't know what the hell is going on. My monitor, maybe? I don't know what the heck is going on here. See this right here? We got the triggers. We got the triggers. We got the trigger right there. We got the pivots. Yeah, right there. I got some funky going on here. Hang tight here, boys and girls. We're gonna fix this right now. Hold on here. I can't do this anymore. It's freaking me out here. Hold on. Oh yeah, it's so much. Nope. Still having those problems too. Hold on here. What is going on here? I don't know what is going on with my screener here. Let's do it like this. Hold on. Dude, what is going on here? I'm having some real Dude, what is that? Should not be happening. I'm having some real issues this morning. I don't know why. Anyways. We got some issues. I can see that gap there. Back testing the weekly trigger right now. R2 sits at 566.33. Another target above of 566, 567.70, 568.57. I want you to remember that at 10 o'clock and 10:30, typically after NFP and unemployment, sellers are going to attempt to come in about an hour after NFP and unemployment and sell the market. It's a bread and butter trade. Doesn't always work. I don't think it works in this scenario, to be honest with you. But we're going to talk about it. Remember earlier, I want you to remember something here, okay? Remember earlier when I told you if we break above the weekly trigger, it should look something like this, right? Higher highs, higher lows, right? I drew this for you just a few minutes ago. Should look something like this, right? We have the high here. We have a failure of a high. I personally would really like to see one more high here. I would like to see the high tick and then the roll. Now I'd like to see that hold. Okay? So I think this might fail today. I want you to see the island. There's a gap to close down below here, but I want you to see the new island. Break above and up. We're right on the weekly trigger right now. I want you to mark out on your charts at home that prior high right there. All we need is the new high. That's it. Just one tick. We're going higher if you don't know. Just letting you know right now we're going higher if you don't know. We're not selling. I'll just let you know right here. We're going higher. Your base is right here. This is your base right here for the breakout above. Screen box. Now, why are we having all this discussion about depressions, recessions, outlooks, the recession trade, the all-time high trade, the collapse trade? Well, one, because we're in FOMO, aren't we? We've got positive news upon positive news. I mean, we had some astroturfing yesterday, day before, didn't we? The U.S. is negotiating with 200 countries. I'm like, oh, really? You got fucking negotiation teams? 200 of them? What the fuck does that cost? How many people are involved in that? You got teams, that would be like what, 100 to 300 people per team with support and logistics? Talking about the communications needed for that, it's insano. Then now you have talks of blankets stuff, right? So this is all in service of what? You've got other discussions out there that Trump is going to bend the knee here right now. That doesn't make any sense to me either. If you're MAGA out there, this isn't what you fought for, right? This isn't what we fought for to build all these factories, is it? To go this far and then fucking get on your knees and beg? No. Do you think China's that stupid? They're much smarter than most of our leaders. Most of their leaders have big degrees. They're a command-oriented economic system too, aren't they? They can command their companies, their people to do whatever they want, can't they? There's no committee and decision making in China, is there? So this is fluff, isn't it, to some extent? Unless we get something material written in stone, isn't it? So we should take anything that's being said right now as with a grain of salt in service of this transformation, this new economic economy that we're going to create, isn't it? If that's the case, we should be wary of the trade lower and the failure to go higher to all-time highs, shouldn't we? Unless something materially changes here. You should see a failure above, shouldn't we? We should see a failure of an all-time high, shouldn't we? We shouldn't see the dollar go into trade 7,500, 7,200, should we? We have the Fed sucking money out of the system, don't we? Now, counter to that argument, we have the reports from this morning, don't we? We have some looming stuff in the background. We've got some commercial stuff we have to look at, commercial real estate. But why did our reports look so good today? Because we're front-running tariffs currently, front-running hiring. Believe it or not, we're hiring people, even though people tell you they're not. That's not true. We scared people into into not quitting their jobs too. We had some natural quits, but we also had people not jumping jobs anymore. We'll talk about that later today too. Our economy is still in good shape. We haven't had shocks yet. The U.S. is permanently optimistic. Permanently. permanent exceptionalism in the United States. People don't want to accept that this could happen, right? We've got companies out there that bought products before today. They loaded up on pencils, didn't they? We have companies today that did not load up that are literally, even if they voted for Trump, saying what? We'll wait and see. I'm not going to buy more pencils. Trump might change his mind or get what he wants. Right? Permanent optimism. What the fuck is happening, sellers? I thought you were going to come in at 10:30 and sell us down to the depths of hell. Your bread and butter trade on a Friday after NFP. New high on the day for SPOOs. Huh. Shocker. Trading R2 566.35. Oh yeah. So that's all we needed to do right there, by the way. That's it. Just that high right there. So no, all we got to do is hold the support and we'll start doing the zigzag up there. So so funny. So it's funny how you predict this shit. Anyways, I'm losing track here. So we want to think about the fact that there's some danger above in the stock market, but we want to also talk about like this risk stuff and this shock stuff and this permanent optimism. Now, simply put, if you were to go to a Walmart and you look up top on the top shelf, you see boxes of shit, right? Boxes and boxes of crap. Those boxes are starting to disappear. We have a 30-day period for shipping to get products to the U.S., don't we? We have people that are eternally optimistic, business owners, stuff like that, right? They're going to wait this out at every step of the way, right? Or buy products before we get there to wait this out, right? If policy doesn't materially change, you should begin to see some shocks. You'll begin to see things like products being replaced with shit that we can actually make. As an example, Walmart is beginning to put out, those middle bins in the cold section of Walmart where you can look down into a cooler. Supposedly, they're already breaking out 1-gallon jugs of purple drink and pink drink, like Kool-Aid shit in a 2-gallon jug. Or 1-gallon jug, I should say, to replace products that would normally be there, right? So you won't necessarily see fully empty shelves, but you'll begin to see spottiness. You'll see those top boxes disappear. You'll see crap replace normal stuff. During COVID, I went to a sporting goods store, and all I saw was yoga shit. That's it. Yoga shit everywhere. If you looked for anything in your size, you couldn't find it. If you looked at what you really wanted, it wasn't available. Store looked full, but it wasn't. You should begin to see that deterioration over the next 2 to 3 weeks. You should also begin to see real shocks by summertime. Summertime, the summer trade. So we could get some shocks in the next few weeks, but the biggies are probably this summer. So it's not today. It's down the road, like a boiling frog. Exceptionalism, right? Terminal optimism. We live in the United States of America. Greatest fucking country in the world in some ways, isn't it? I wish we were more like some of these European countries, right? Like Netherlands, right? Amsterdam, cool shit. They do good stuff up there. Or not, but for a big, large, huge country, people want to live here, don't they? We have excess. We're loud and fat, right? We drive big, fat sports cars, land everywhere. Eternally optimistic, loud, right? If you're not from the U.S., you know this, right? Americans walk around acting like they're the biggest shits in the world, don't they? So you'd expect that behavior from Americans until they panic, right? And when they panic, what do? They hoard toilet paper, don't they? If you were to shut down Walmart and Amazon next week, Americans would fucking implode, wouldn't they? They're on every drug. They're eating too much. But once they do panic, they panic, don't they? They freak the fuck out. But they're like a boiling frog, and the government's going to do this too. They're not going to let you freak out and panic. This is manufactured. This isn't COVID. This isn't a war, an unknown. This is manufactured. So they're going to piecemeal it to you so that you're not shocked. You don't feel it. And every time you start to become shocked, they're going to begin to try to soften the blow to you, aren't they? It's the same reason we introduce conversation about Canada, Greenland, Colombia, Panama. It's the same reason we discuss or try to break relationships post-war pacts with other countries. Why? Because if we go to World War III over this trade war, we want to renegotiate those terms, right? We negotiated those terms post-war, didn't we? In World War II, Churchill was on his knees begging for intervention. Germany was on his doorstep. They were at on their last leg, and we renegotiated with them too, didn't we? All of this is in service of danger ahead. So, if we're going to break above the weekly trigger, if we're going to fail higher, we would be looking for what? I think McGilligot put it nicely yesterday. We'll talk about what he had to say on this topic right now. This is someone that's not a doomer. You've had Jerome Powell, probably the fucking only person out there that's told you the truth. The Oracle of Omaha has told you this, now owns more of the bond market than the Fed. You've got guys that even though they're sell side, they're not doomers. You know, McGilligot's not a Hawes or a Northman trader or a maverick of Wall Street or any of those perma bears. He's a sell side, but he doesn't come out every week and say, hey, man, you know, this is real. If you're not one of those like conspiracy theorist, collapse-centered, prepper type people, feels weird to be thinking this stuff, doesn't it? It can't feel normal. It doesn't feel normal for me. Feels crazy. Like I'm taking crazy pills. But yet you've got McGilligot coming out from Nomura. Vaunted. Right? The popping of the AI CapEx bubble theme is back in the fetal position, with projected CapEx firepower across the AI majors. And power ecosystem now resetting higher again. He goes on to say, all of this force in both mechanical and otherwise being said, and as already stated, many of the traders I'm speaking with still hate hate this macro setup for equities into summer. Why? Why do they hate it? I would be curious to see a few more days or even weeks of a rally as we clear the rest of Mag 8, EPS with continued resumption of, quote, less bad to even good, end quote. But then open the door for a pullback, even around options expiration on the 16th of May. Or the potential for, quote, supply shocks, end quote, supply shocks to show on U.S. store shelves by the end of the month. You should expect some supply shocks possibility end of this month, next 2 or 3 weeks. You could also get more supply shocks in summertime. This is coming from someone that's normal. This isn't a perma bear doomer like that. Miguel Agate doesn't come out every day and tell you this stuff. Jerome Powell came out in a Q&A at the Economic Symposium in Chicago, and not in his prepared remarks, but in the Q&A said, we have nothing to gauge this against in modern history. You can only go back and look at what we did in the 1920s and 30s, just after the creation of the Fed. And they raised and sucked money out of the system as we had a huge change in our economy. And you're expecting a cut? You're not getting a cut. You're not getting a cut in May. You're going to get more QT. And they're going to keep sucking and sucking. They're going to remove the money from the market. You're going to need to print dollars and hide them under your mattress once again. So he's saying look towards not the first week of May, May 1st through 5th. He's saying push it out to middle to late May. And his thesis is you're not going to get your summer trade up into mid-July. So the thesis here would be we do what? We break above the weekly trigger. We fail a major high and return to all-time highs. Sooner, not later. So we have to pay close attention to this in the coming weeks, don't we? Today is May 2nd. The next 2 weeks, if we begin to top and trade sideways, this is very similar to the setup in mid-February. So if we're here on this show with you and it looks like we're going to roll and we're following our rules and our tools and not what the talking heads say and not what social media says and not what the White House says, we have to look for that hedge, don't we? Right around middle of the month. It may not happen, though. We're going to look at what Larry Williams had to say on this. His thesis is that we're strong into mid-July, and our strongest time of the year begins in mid-September. So we'll use these as signposts. Do we reject the weekly trigger? Do we squeeze above? Do we have enough time to squeeze above the weekly trigger? We'll look for supply shocks, right, in our real lives, won't we? We'll start going out and looking at like, hey man, is there still chips on the board there? We make those, right? Is there still toilet paper? Is anybody freaking out there? Are they hoarding yet? Toilet paper's made in the U.S., but if it disappears, it means they're hoarding, right? Are the things we want to buy from other countries not here? We've got some signposts, middle of May, middle of July. we know we have to pay very close attention to not hourly candles, but what? Daily candles. Right? Daily candles. Daily prior highs, daily prior lows. What else do we need to pay attention to? If we're going to get the shock, when would it take place? Do you know? It's typically over a weekend. Friday through Tuesday. If you don't know, I'll let you know. If you go back and look at those major sell sides in 2022, where we topped, it was always on a Friday or over a weekend. So if you're looking for a shock from now into the middle of May, you must have an ability to hedge yourself. I wouldn't necessarily be a seller, but I would be hedging while looking higher. So we're going to have that discussion right now. We've had this discussion before. We're going to have it right now. So if we're looking to go higher over the weekly trigger, if we're looking for shocks between now and mid to late May, today is May 2nd. We're having this discussion on May 2nd at 10:46 in the morning. We're going to have this discussion twice, once today, and we're going to likely revisit this middle of the month. And then after, you're likely going to say to me, Cap, I don't remember that conversation. Cap, I wasn't listening. Cap, I didn't believe you. And it's okay. We record all of these videos. I'll just direct you back to today in the middle of the month. So we want to know is what? Every weekend, when we leave markets on a Friday, even the open on a Friday, 9:30 in the morning on a Friday, the moment we hit a Friday, every week for the rest of this month, from Friday to Tuesday, I want you to think about all positioning you have long bullish in this market or sideways. Hey, man, I'm a theta gang. Hey, man, I'm a bull. I want you to think about that and your ability to hedge it waking up on a Monday with a 3% or 5% downside move. Can you absorb that or not? And if you cannot, I urge you from the depths of my heart, I urge you to close those positions and sleep like a baby through those weekends. If you cannot, there are ways for you to hedge. You can get yourself a futures prop account, dirt cheap. Go through the combines, get certified, have a way to sell futures. This is if you're a bull or sideways theta gang member. If you're going to be putting trades on over a weekend that are bullish, have some kind of a hedge against or with them. You do a ratio long for next month to capture this bullishness. Make sure it's a ratio spread. If it goes against you, you'll break even. Does that make sense? If you're long underlying and want to buy cheap-ass puts on a Friday that burn, if the market goes higher with your underlying and you break even on Monday, but we bump higher, your puts burn, but you're not losing any money, over the weekend is dangerous from now through the end of May. It'll happen on a Friday through a Tuesday. Could happen on Monday morning open. Could happen on Friday close over the weekend. Could take place at 9:30 a.m. from Monday through Tuesday. Big blasts down. So I want you to think of that as we move through the next 2 or 3 weeks, regardless of what China says or Trump says or Besant says, regardless of what your news tells you, regardless of what FinTwit tells you, Reddit, Truth Social, I don't care where you get your shit. As a matter of fact, this weekend we've got a hit piece coming out on 60 Minutes. 60 Minutes on Sunday is going after Trump. You know he's going to be out there freaking out. He's going to be on the horn. SPX trying to trade that 5,700 this afternoon. We're coming into a weekend right now. Now, what do I think happens this weekend? I think we gap up. I think we're going to gap. And I don't think we're selling Sunday. I think we're going to gap up here into Monday. We're going to get above these weekly triggers nicely. And we're going to start squeezing people out into the middle of the month to the upside mechanically. Did you notice yesterday they stopped Apple from going up on a good report in Amazon? They did it the day before, too. All boats were lifted 2 days ago. They sold Apple after the bell on Wednesday to Thursday, right? Amazon and Apple being held back. See Amazon revert this morning. And we're in some positive gamma, too. That probably has something to do with it. We had a bunch of reports while we were in negative gamma, so we squoze. Now they're in positive gamma. A little bit more normal, right? Theta Gang wins again. But I want you to think about over the next 2 weeks, and it includes this weekend. Every weekend for the next month, I want you to think about your positioning in the market. We also have trapped sellers above. We have people that are at 62, 72, 73, 62, somewhere in there. We got traders that are long from back in end of last year. If at any point we're primed for this. Fool me once, fool me twice. If we start at any point selling that above weekly trigger and start heading lower, you're going to scare the shit out of retailers. And we will super uber ramp, right? Remember, panic. We're not in panic yet, but if we trigger it with supply shocks, we trigger it with devolving trade negotiations, right? The warfare increases. Now into summer, price starts to fail, right? Going higher. We're not going all-time highs. Oh, shit, we're not hitting 5,900. Oh, shit, we're not doing 6,000. Any of those triggers, things can get ugly. And I want you to just be aware of it. Do I think that's going to happen? Yes. Yes, I think we fail at least 5,900. Maybe 6, but I think our best bet is 5,900, 6,000. That's the best outlook we can expect. But I don't even think we get there. I think we get the wave of sellers at like 5730, 5730, possibly 58 or 5,900. But I think it's real. I think right now, unless something materially changed that I don't know about, you don't know about, you're starting to hear guys out there that are never, ever would address those concerns, addressing those concerns. Miguel Agat being one of them, even though he's sell side and shit, he's still not that, oh, we're going to have an apocalypse, or a collapse or all that kind of shit, the crazy that's out there. Conspiracy theory attitude. You're seeing it from normal people. So Miguel Agat going on to say, they hate this macro setup for equities into summer. He said, I would be curious to see a few more days or even weeks of a rally as we clear the rest of Mag 8 EPS with continued resumption of less bad into even good. but then open the door for a pullback even around options expiration on the 16th, or potential for supply shocks beginning to show in the U.S. store shelves by end of month. So he would be looking to close all those gaps that we've left behind, right? So we break above, we got a bunch of gaps lower. You'll get that in your brief, your weekend brief, by the way. For now, we know where we're headed. We can possibly get a pullback over the weekend, but I don't think we do. I think this is your bottom for right now. This is your bottom. We ain't going any lower. Not yet. Upside close target possible 570.35 cents to the upside into the bell. I'd like to see us hit this middle one right here, 567.71. But I think it's completely reasonable to trade this top target, 570.65, into the close today. Your jump point is right here in this green box. Let's talk about one other thing here. We're going to talk about this morning. We're going to talk about three important things for May. If you're wondering about non-farm payrolls and unemployment this morning, I'm going to read to you something that came out earlier that actually told the story before this morning's numbers. I'm going to read this to you. It's from Wolf Street. Now, this was not this morning. This is from prior reports. This is a bit of positive news. Inflation is in the revisions. What stands out once again in the PCE price index? Sharp up revisions of prior month's inflation. Give me a second here, guys. We're not going to start with this one. We're going to start with a different one. Hold on here. We're going to lay the groundwork here. I want you to think about right now what you consume and regurgitate in public. One-minute trigger, weekly trigger, 5-minute trigger, cluster. This is prior to this morning. Despite all moaning and groaning, layoffs and discharge plunge. Layoffs and discharges plunge. Hires and voluntary quits rise, driven by private sector strength. Counter to everything you're reading. Oh, bro, there's layoffs everywhere. There's tech layoffs. Bro, my company's doing this. Bro, it's terrible out there. There's no jobs, bro. The data disagrees with you. Hires and voluntary quits rise, driven by private sector strength. This is from April 29th, not May. The labor market started regaining momentum in the fall of 2024, and it continued through March. Layoffs and discharges plunged by 222,000 workers in March from February, seasonally adjusted to 1.56 million. The lowest since November 2023 and far below the pre-pandemic range. Despite the layoffs and discharges at federal, state, and local governments that soared to 107,000 workers. The highest since the end of the census period in late 2020. Shit, Al Gore got rid of more federal workers than Trump has. And as a percentage of our total employment force, it's small. These workers who got fired with or without cause, a common feature of the U.S. labor market, and the workers who got laid off for economic reasons. But it does not include retirements, deaths, etc., which are in the category of other separations. And it does not include people who quit voluntarily to take a better job elsewhere. Those folks are also included in quits. The 3-month average, which irons out the month-to-month squiggles and revisions, declined to 1.67 million, the lowest since August 2024. This data from the Job Openings and Labor Turnover Survey, the JOLTS, by the Bureau of Labor and Statistics today is based on surveys of about 21,000 work locations. You know that meme? You know that meme where they grab you by the eyes and say, look, look. Layoffs and discharges by thousands, 3-month average, lower, not higher, lower. Now they could go up over 3 or 6 months and go crazy. But month to month squiggles don't make a trend, does it? Quits soared by 82,000 workers in March from February to 3.3 million. the highest since July 2024, despite a drop in quits at government work sites. These are people who voluntarily quit their jobs, not including retirements, deaths, etc., such as to take a hopefully better job somewhere else. At just private sector employers, quits soared by 91,000 workers to 3.1 million. 3.15 million, the highest since April 2024. The 3-month average soared to 3.09 million. A higher quits rate of quits means federal workers feel more confident and or see better opportunities elsewhere. Open your eyes. They feel more confident. They're feeling more confident. Still. Counter to what you're being told everywhere else, right? The upside move on PCE and unemployment today, right? Bro, I'm on FinTwit. Everything's horrible. Bro, I'm on Reddit. Everywhere I read, layoffs everywhere. That didn't happen in price in the stock market today, did it? When you take your Main Street hat off and you put your stock market cap on, you leave that shit at the front door, don't you? But quits are still below pre-pandemic levels as employers succeeded in scaring the bejesus out of their employees. Listen to this closely. I want you to listen to this because you and I are plebs. Quits are still below pre-pandemic levels. Employers, these are the people that lie to you. Like a CEO or a financier or a politician. Quits are still below pre-pandemic levels. Employers succeeded in scaring the bejesus out of their employees by announcing mass layoffs starting in mid-2022. A strategy with which they attempted successfully. Remember when everybody was jumping from job to job? Higher money, more money, outrun inflation. Bro, I'm getting all this money. So employers threatened people with mass layoffs. Not because they were laying off, because they didn't want you to leave your job. They wanted you to accept that money and feel fearful. A strategy with which they attempted successfully, I would have to say, to calm down the enormous churn in their workforce during the pandemic when employees quit jobs in huge numbers. And employers were forced to pay much higher wages to hang on to the ones they still had and to hire new workers to fill the slots left behind by quitting employees. This churn got to be very expensive and reduced productivity, and employers began to reassert their power in mid-2022 and got employees to hang on to their jobs and be grateful they even had jobs. They lied to you again. These still lower than pre-pandemic quits means fewer job openings left behind than before, as we'll see in a moment. And for employers, that's a good thing. Hires jumped by 41,000 in March from February to 5.41 million. Seasonally adjusted, the most hires since September 2024. The 3-month average rose by 12,000 to 5.38 million, the highest since November 2024. Let me show you this. Three-month average hires. Oh, what are we doing? We're turning up. Can it go down? Yes. But right now it's not, is it? Counter to everything you're being told. Counter. And this is the information and data that the stock market uses, isn't it? Labor turnover, what creates job openings? Employees quitting their jobs, getting fired, laid off, or discharged for other reasons such as retirements, and to a small extent, employers increasing the size of their staff as tracked by non-farm payrolls. And you want cuts, right? Right now you want cuts? You want cuts today? You want cuts in May? Trump wants cuts right now? I don't know about that. Maybe when Jerome's gone, if he has asserts power over the Fed or hires someone friendly. We know that even then that doesn't always work, though, does it? In March, there were 3.3 million quits and 1.56 million layoffs and discharges for a total of 4.89 million, not counting retirements and other discharges, versus just 228,000 new payroll jobs created, which was a healthy number. So a low number of quits, layoffs, and discharges leave fewer job openings behind, which explains the drop in job openings. Which explains the drop in job openings. It's not because they don't have the jobs. There's no one available to fill them. This is not a measure of new jobs being created, but a churn of the labor force, also indicated in the title of the data jolts, where the L&T stand for labor and turnover, and the churn has calmed down. People are working the same job. Job openings declined by 288,000. That means that instead of someone jumping and new job openings need to be listed, they just stayed at their job. They don't need to fill the position anymore. Not because they didn't have those jobs available. They've been filled and they're stable. Job openings declined by 288,000 in March from February to 7.19 million, the smallest number since September. This includes government job openings, which dropped month to month to 59,000 to 833,000 openings, the lowest since early 2021. Private sector job openings declined by 229,000 to 6.36 million. The 3-month average declined by 92,000 in March to 6.6 million job openings. This JOLTS data of job openings is not based on online postings, fake or otherwise, but on surveys of about 21,000 private sector and government work locations. So there's an explanation as to why there are no longer that many job openings. It's because we have stability in the workforce right now. You're all afraid, aren't you? You're all afraid of depression, major recession, layoffs, and they got you working and not trying to job jump right now, are you? Or if you are job jumping, what are you job jumping to? Stability, Cap. I left my Mag 7 job, and now I got a job where this tech company is funded by government contracts. What are you going to do at that job? Are you going to try to job jump from there? No, sir. I don't know what's ahead, so I'm going to stay there. Regaining momentum. As the above charts of layoffs and discharges, quits, and hires shows, the labor market, which has been losing momentum through mid-2024, started regaining momentum in the fall of 2024, and that turnaround has continued through March. That kind of explains some of this, doesn't it? Not as much doom and gloom as you've been told. It also gives you some lessons, doesn't it? Number one, first lesson, don't fucking believe the news and sizzle. Don't fucking believe social media. Don't fucking believe Joe, on Main Street Joe, that posts on Twitter or on Reddit. Oh, it's all doom and gloom, bro. Or even that it matters if it is. Our stock market reacts to the data from the Fed, not from Susie Q on Reddit giving you anecdotal evidence of her experiences. I got another fun one for you today. A whole bunch of fun ones, actually. I don't know if I want to do this GDP one with you yet, though. Yeah, we can. Because I hear this, too. Debt to GDP ratio cap. We're screwed. Let me tell you something. Our deficit continues to rip. Whenever you hear our deficit going higher, that's good for bulls. More deficit, more spending, the better. Yesterday, you had Trump talking about a lean spending bill. Whenever you label something lean, it's probably fat as fuck. Right? If you eat lean cuisine, there's problems, right? You know what I mean? Whenever you go to a car lot, whatever they really emphasize usually is a scam, isn't it? GDP whacked by massive spike in imports and front-running of tariffs. Consumer spending grew. Front-running spending of impending tariff implementation. Business investment soared. What is that? This is GDP, debt, right? Gold. A massive spike in imports, by far the worst ever. Ever. This is forward doom later, right? On tariff front running, subtracted 5.0 percentage points from GDP growth. Adjusted for inflation, turning it negative. A decline in government spending subtracted another 0.25 percentage points and turned GDP growth to minus 0.3%. Despite decent growth in consumer spending. Consumers still partying, up 1.8%. And a huge surge in gross private domestic investment, plus 21.9%, including a 22.5% increase in investment in equipment as companies have begun ramping up investing in production in the U.S. to avoid tariffs. We built all those factories, didn't we? And what are companies doing? They're investing. So when you hear that we're not changing our economic future, it's a lie. I have the data on the factory builds. I have the data on the reinvestment in manufacturing in the United States. It's from the Fed. It's right here. You're looking at it. A huge surge in gross private domestic investment, 21.9%, including a 22.5% increase in investment in equipment as companies have begun ramping up investing in production in the U.S. to avoid tariffs. We'll start with net exports because they're the stars of this show today. Net exports are exports minus imports. Exports are positive in GDP. Imports are negative in GDP. Net exports driven by an explosion of imports on tariff front-running worsened to a seasonally adjusted annual rate of negative 1.37 trillion in Q1. Exports 1.8%, goods exports plus 3.2%, services exports negative 0.7%. Exports added 0.19 percentage points to GDP growth. Imports plus 41.3%, goods imports plus 50.9%, service imports 8.6%. This reduced GDP growth by 5.0 percentage points. Net exports. Largest on record. Largest on record. Say it again. Largest on record. That's bad right there, right? That's 2020. Kind of ugly, right? Ugly. Largest on record. GDP dipped by an annualized rate of 0.3% adjusted for inflation. Real GDP after growth rates of 2.4% in Q4 and 3.1% in Q3. Exploding imports are not a sign of weakening demand. The Q1 2022 drop in GDP was also caused by a surge in imports after the shortages as supply chains recovered and backed up goods began arriving in the U.S. A note here really quick. We have the high back here at 10:30. We have a lower high here at 11 a.m. And we got a new high here, but it's a little consolidative, but not quite negative at this point. But watch this closely here. Want to see if this holds. We have real support at 562.32, 56508 right here. Hang tight a second here, guys. I got to take this call. Sorry about that. It's a guy installing a second line in my house. Okay, so we're going to see if this holds here. This is a little more consolidative than I want to see here. Still haven't hit our upside target. Whoop. Up there. Still holding strong, though. Remember that this is the weekly trigger that we're on right now. We're getting the help of the 5-minute trigger. Half an hour trigger is sweeping higher. Hourly trigger sweeping higher. I also want to show you in the bottom right-hand side of your chart, there's a little bit of rejection here in the weekly trigger. This is SPX. The target, of course, is 5,700. We want to see this island hold here. This is SPX right now. I want to show you this. We want to be holding this right here. It is possible that we sweep lower. Always remember your rules. If we sweep that close there and come back higher again, we're fine. The move down is never the problem. It's always the second move down with the new low that becomes a problem, isn't it? Just be hanging out down here in case we need to grab something lower. We'll take a quick look at Gamma and just see where we are in the market together. See if we're roped in here with a pin on market. We've got a pin today at 5,700. So this is the target. Remember, if we're breaking above, is something like this, right? Up into that 5,700 end of day. I don't know if that's end of day today. Yeah, it's about end of day. Just be open to these swings lower. If you're trying to get long into the close and you know we're in positive gamma, just trying to buy any low that comes your way. How does that relate to you right now? It's right here. Here's the gap higher. This is what I was showing you on the SPX gamma chart, right? If we're smashing and bashing up here, right? Smashing and bashing. Any lows that you can get in on, those higher highs. We sweep down here, we'll grab them. Any opportunity. Right now, we're holding. If you want to get in today at some point, it's a nice little gap down here that needs closed. Half-hour trigger right here. Hourly trigger right here. I don't know that we get that low, though. You know they're trying to sell us 1 hour after the open. They're going to take every chance they can to sell us up here. I promise you, there's traders that are hitting the sell button. They do not want to see the break higher. We also have the effect of traders trying to go risk off into the weekend, take their money and run. Have a new low right here at the moment. We'll make this a dotted line. Excuse me here, I got this wrong. Something like that. Oh, that looks horrible, doesn't it? Not quite there yet, though, so we're going to leave it in a dotted. We need to confirm the cross, don't we? Be Johnny on the spot waiting. Just don't take the trade until you know. You want to see the low, but you want to see the failure here. Low, new low. And then you're Johnny on the spot taking it downtown. Meat of the trade is right here. It's not up here. It's not calling a top. It's right here where the money is. It's where the most consistent winning is. Back to GDP. U.S. real GDP percentage change from the prior quarter annualized. You look at this chart below here. It's weak, but it's not pandemic level weak. It's not 2000. This is 2000. This is 2008, 2009 over here. This is 2020. It's a little weak. That's not looking too good, is it? Our market has dropped in kind due to it. We've had a major correction. We're still not down here, though, at minus 1%. This is cause for concern this summer, though, isn't it? In terms of dollars, real GDP dipped to an annual rate of 23.5 trillion in Q1, according to the B of E analysis today. U.S. real GDP inflation adjusted, flattening, but it has not rolled yet, has it? Final sales to provide domestic purchasers, the private U.S. economy. What's happening here on the markets? We're not losing yet, are we? We're still showing strength. You're waiting for the new low to get short. Not yet. Still long here. Or flat. You're actually being given an opportunity to get out right now, but I think we're not going down. That's why this is a dotted line and not a solid line. We're breaking out and up. Big, giant sucking sound, as Ross Perot once said, of up. Final sales to private domestic purchasers of the private U.S. economy. This metric is part of the GDP report released a few days ago by the BEA and tracks U.S. private domestic demand from consumers and businesses, including fixed investments by businesses. It is GDP less exports, less imports, less government consumption expenditures, less government gross investment, less change in private inventories. It covers about 87% of GDP and presents the core of the private U.S. economy. If you are long still, you can exit here and jump back in on a new high over here. But I think we're staying long. This metric is part of the GDP report released by the B of E, tracks U.S. domestic demand from consumers and businesses, including fixed investments by businesses. It is GDP less exports, less imports, less government consumption, blah, blah, we already went through that. Powell also mentions it from time to time as a purer indicator of private domestic demand from consumers and businesses, which is what monetary policy is trying to influence. Not trade in government spending. So right now we're like flat. We're not negative. We're not booming. But GDP is not bad. Not like the real bad. Adjusted for inflation, final sales to private domestic purchasers jumped by an annual rate of 3.0% in Q1 to 20.7 trillion. This is going to lead us into debt to GDP here in a moment. Up 2.9% from Q4, attesting to the strength of private domestic demand and investments by consumers and businesses. Consumers are spending. Businesses are reinvesting in America. The blue columns show growth rates, left axis. The red lines show dollars, all in seasonally adjusted annual rates. Final sales to private domestic purchasers, inflation adjusted. Look at 2020. Look at 2009. Look at 2025. Up. Up. Not down, up. Not adjusted for inflation, current dollar GDP grew by an annual rate of 3.5%. I want you to think about everyone out there telling you that GDP is terrible. And I'm not talking about the Trump taking things out of GDP stuff. I know all about that. I know all about that crap being brushed all over the place, painted everywhere. Not adjusted for inflation, current dollar GDP grow by an annual rate of 3.5%, 30 trillion. Sometimes it's called nominal GDP. It represents the actual size of the U.S. economy. In today's dollars and forms the basis for debt to GDP ratio. We're going to talk about that in just a minute. Nominal GDP is cranking. Look at that line, baby. Up. Consumer spending rose by an annual rate of 1.8% in Q1 of 2025. Now, this could be what? We're front-running tariffs, and we're front-running tariffs again, right? The consumer is buying before tariffs hit, and companies are investing what? Equipment in the factories that were built. Perpetual optimism. Perpetual exceptionalism. Consumer spending along with business activities got disrupted by wildfires in LA County, nearly a 10 million person population in Q1, and the disruptions is included in the GDP data, but the E of A says it is not possible to estimate the overall impact of California wildfires on first quarter GDP. So it's in there, but it can't be split out. Private fixed investment jumped by 7.8% annualized and adjusted for inflation, the highest growth rate since Q2 2023, and the second highest since Q1 2022, of which non-residential fixed investments up 9.8%, structures up 0.4%, equipment. I showed you in the Depression brief factory builds. I'm now showing you the equipment to fill those factories. Whenever you have the conversation with people telling you, I'm waiting for things to change, I'm waiting for Trump to stop the tariff war, grovel in front of China, that's not going to happen. The real money is behind the scenes doing something else. They built a shit ton of factories. They had meetings in COVID. They had nothing better to do with their time, so they did hookers, cocaine, skiing, beach trips. During COVID, when I would go on vacation, you guys know I went on vacation during COVID. They put pictures and video up. A lot of you guys know this. I said to you, what? I don't know about what you guys are doing, but the rich ain't chilling. They're not at home having bubbles with their neighbors. They're out at Vail partying. That's what they're doing. Guess what else they were doing? You got your CEOs hanging out with your Congress people having sex parties and whatever they're doing. Remember that one guy from the government that was having sex parties in New York? He wasn't a senator, though. He was like a COVID guy. He was having sex parties in New York. Big fat ones, big party raves, swinger parties. All these CEOs are partying with fucking financiers and bankers, lawmakers. And like, bro, all these shortages, I can't live with that, man. Oh, by the way, man, we're building robots and LLMs, and why do we even need this cheap labor anymore? Is it really going to happen? Yeah, of course it's going to happen. How long is it going to take? I don't know, 5 years, 10 years? Why do we need this cheap labor in another country for? Why do we even need to produce this shit in another country? We should start building factories, man. We should put people in power that have been on board with this. How about that Trump guy? Keeps talking about it. We'll take a break from him and put him back on. Back and on. On again, back again. All the noise as a pleb does not equal what is happening behind the scenes. DNC, complicit. RNC, complicit. Real money, complicit. CEOs, complicit. You're not buying fucking equipment for a factory. I'm not buying equipment for a factory. I'm not building a factory. You're not building a factory. But they are. And some of this shit, they don't like to talk about it, do they? There's no headlines out there telling you they built all these manufacturing plants and factories, is there? You don't read about that anywhere. As a matter of fact, if you read anywhere, the constant garbage spewed is, what's Trump going to do? They don't have the manufacturing capability, bro. It's going to take decades. They already did it. Now they're buying the equipment. They're like 3 steps ahead of you and me. I want to show you this last chart here. This is government consumption, expenditure, and investment. It's down. That's good. Debt to GDP ratio improved slightly to 120.8% on 3.5% growth in current dollar GDP. And the Treasury debt that has been stuck at the debt ceiling of $36.2 trillion since the beginning of the year. As soon as the debt ceiling is lifted, the debt will spike, and the debt to GDP ratio will worsen. You want to pay attention to that. The debt to GDP ratio is based on current dollar GDP and on current dollar Treasury debt, neither adjusted for inflation. The effects of inflation being both in the numerator and denominator cancel out. The spike in 2020 occurred as GDP collapsed during the lockdown while Treasury debt jumped on government's free money giveaway spree. Are we doing that right now? No. We're doing QT, aren't we? So if you see the government raise the debt ceiling, if we spend more, but we're still killing dollars in the economy through QT, the debt to GDP ratio should still go down, which it is right now still. Debt to GDP ratio spiked 2020 down, up a little bit, but flattening and rolling right now as we speak. On inflation that has not hit yet. I want you to tie this part into the shocks. If we go into the middle of May and July, we can get shocks, right? Inflation shocks. Now, those inflation shocks or shortages shocks can take time, can't they? So you have this like window. You've got this time where you get a shock. This product's missing. You also have the placation from government. You have Trump out there and Besant, right? What do? Oh, we're working on a deal with China, bro. Pumping the market. Right? But you can get shocks. Shocks aren't permanent and priced in the stock markets, but you can get them. You still have companies that have been buying goods, right? Like pencils. You've got other companies that are refusing to pay the tariffs in advance in case this resolves itself. But inflation is coming down, isn't it? This is the PCE rate here. And look at PCE. Fed's target, 2%. PCE is in red. PCE coming down right now to what? The Fed's target, 2%. In line with averages. We want to look for inflation to rise, huh? So what does the Fed need to do right now? Let me make this larger for you. What does the Fed need to do right now? Tell me. Does the Fed need to cut? Not yet, right? We're not at 2%, are we? There's no need for a cut right now. None. We're not at 2% yet, are we? No need to cut yet. And they're still sucking the money out of the system. And if anything, they have to do nothing, do they? And they can continue on with their operation of sucking dollars out of the economy. Real money, paper money. You could pause it here. Oh, yeah, baby. We're going to squeeze them all out now, aren't we? Oh, yeah. Rage from sellers. Almost on target, boys. 567 coming up here soon. PCE price index still rolling down. I don't know if you can see this here, but the core PCE price index decelerated in March to 0.03% from the heavily upside revised level in February, 6.1% annualized. So month to month looked ugly. We had some data from two ends that looked ugly, but they annualized, even themselves out once we came into end of quarter for Q1. Housing inflation accelerated. PCE price index for housing, one of the main components of core services based on various rent factors. It surged by 0.39%. Why? Why? You can buy property now, even if it loses value, if we head into a major recession or depression, but you'll still have income, won't you? People have to rent homes. Even if the government pays for those homes, right? Guaranteed income, dollars flowing in your pocket. So there is, again, reinvestment in rental properties for residential properties in the United States. Rental properties. And the ask is raising again. That's not good, is it? We're actually bottoming right now in housing prices in terms of rents. Durable goods prices declined in March from February. So there's still a window for you, or has been a window for you, to load up on durable goods before shocks hit the market. You just read a story yesterday about McDonald's. I told you earlier that people were fed up with the bullshit from McDonald's. I've been on that, harping on that for what, 6 months? People's dining habits are changing. There are new companies that relate it to Howard Johnson's, right? Howard Johnson's was cool years ago. Hotel, restaurant, cool shit for a different generation. Kids' dining habits change. My kids drink boba. Your kids probably do too. Most of you probably don't even know what boba is. Some of you are out there going, you know what? I'm not going to eat McDonald's. They got they got new burger joints out there like Culver's. You got chicken shacks out there selling you hot chicken. Nashville hot chicken, right? Not that shit chicken from McDonald's. You're also running around and you're what? Buying steaks at Aldi. But what are they lying to you about? McDonald's, right? They said to you this week, oh man, McDonald's in trouble. What they didn't tell you was what? The shit that I told you. The CEO lied. CEO told you they were going to give you a better value meal. They gave you a worse value meal. You didn't believe them. You looked and said, oh, I'm not getting a deal here. They're lying. I'm not going back to McDonald's. They want me to pay this money, $30 for a meal. But you still spent money out in food and beverage. Food and beverage prices surged by 0.46% in March from February and have been zigzagging higher from the low point about a year ago. This is counter to what you're reading about McDonald's right now, isn't it? These are food and beverage products that consumers buy to consume off-premise. They do not include food and beverages consumed on-premise, such as restaurants, bars, cafes, etc. The year-over-year food price index has been accelerating since mid-2024. So you guys are still spending money. You're just not choosing to spend it at McDonald's. That's not negative. Might be negative for McDonald's. But consumer habits change over time. There is no decline at the moment by consumer spend overall on food and beverage. They're still spending money. That means the consumer has not been damaged yet. Energy prices plunged to 2.7% in March. You know that, right? There's gas around this country sub $2. Maybe not in LA, but it is sub $2 in some places. PCE looked pretty good, right? Not bad. On QT, Fed's balance sheet minus $14 billion in April. Negative $2.26 trillion from the peak. The government is sucking money out of the system. It's the lowest since April 2020. Quantitative tightening has shed 25.2% of total assets. The assets to GDP ratio declined to 22.4%, first seen in 2013. From crisis to raging inflation to QT. Remember when the doomers told you it's going to get out of control? It didn't, did it? They brought it down, and they brought tightening on board, right, to bring us back down to 2020 levels. They're going to continue QT, aren't they, and get us back on track, right? This is the GFC. No crisis. Spend, spend, spend. Spend, 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 spend. Do you see a spike yet? No. The answer is no. We're actually removing dollars from the economy. Why is gold up? War, trade war, potential war, sucking dollars out of the economy, revaluing the dollar on a change in our economy. Two weeks ago, I had meetings with two people, and they said to me, Cap, what are you going to do if we go into a meltdown? How are you going to keep the cash flow coming in? And I said to one guy, I go, well, I just talked to my business partner about this. And I said to him, well, how are we gonna outrun the giant sucking sound of cash? I said, I don't know if we can. I was like, do you have any ideas on that? He said, this is my business partner, not this other guy. And we were discussing if there is a larger recession similar to 2008, or if there is a depression 2.0, how do you outrun all this stuff? And I was like, I don't know. I was like, well, we can like stay in gold and be not the last one out. Once it starts to roll over, he's like, how are we going to know that's going to happen? I said, when the Fed starts cutting rates, when the Fed ends QT, that should be the top in gold, somewhere in there. Let's say you get out of gold and you go to cash. What are you going to want to buy, Cap? I was like, well, I don't know. I was like, whatever it is we're going to buy could lose all of its value. Oh, yeah, baby. Squeeze them out. Squeeze them out like a bad donkey right now. Target hit 567.80. Oh, not 61. 67. 561.70. I keep saying one. That's on Twitter too, isn't it? Let me go on Twitter and suck myself off on Twitter really quick. I don't do enough of that. Oh, yeah. Pump it. Next target. $568.62. Pull back. $570.65. Target hit. Yeah. Target hit. Call that one done. He's talking about all this shit that has nothing to do with the stock market. Then he draws in what we're going to hit. We're going to now look for pullback target here. There we go. What up, Cowboy Up? What up, Cyb Surfer? What's going on, brother? Now trading 567.81 and 83. SPX hitting 5,700. Watch out for a pullback up here. We're going to hit some resistance at 5,700. 5,700, the magnet. 5,700 on SPX. The magnet. Hot liquid magma. I also want you to know that the market becomes constructive. COTs, CTAs, punters, vol control funds all want to buy above 5,700. We're in positive gamma above the weekly trigger. If 5,700 is held, this is like a no-go zone if you don't know that. This is like the rage zone up in here. This green line is 5,700. Excuse me. It's also a magnet for today. What we really need to see happen here is 57 to get accepted. If you can't get it done in cash markets, when do you do it? After hours, right? If you can't get up here and hold it, you get up there in the weekend, we gap it up, don't we? If price stabilizes above 5,700, CTAs, that's COTs are commitment of traders, punters, vol control gang, vol control funds, they become very constructive. Retail punters get very constructive. There is a note to be made here, though. We have the secret squirrel trapped retailers at 573 on SPY, wanting to unload into these people. A lot of supply up there. They're hiding right up there. You see them? That's where they are. Now, all of this data that I talked to you about, I want you to take your Main Street hat, your Wall Street hat, separate them, right? We had a nice up move this morning on PCE and unemployment data. We know that some of this stuff is being front run due to price shock, shortage shock, right? Trade war fears. We know there can be shocks in mid-May and also in July that can cause vicious downside moves in the market. But under the surface at this moment, the economy doesn't look that bad. Despite what we're fed in news and social media. So if you do want the bull case for the year, like, hey, Cap's scared of the rejection above the weekly trigger for shocks. I thought we were in the recession trade. We're going to trade all the way up, Cap, to 5,900, 6,000. Cap, we're going to trade a new high at the end of the year. That data supports that thesis. So if you wanted the bull thesis for the rest of the year and not the doomer thesis for the rest of this year, there's some facts out there for you. 1, we've had a major correction. 2, we had the second leg down for front running of this big economic change. We can also experience shocks, right? Sell in May, go away, horrible summer. We could actually trade the market low or even 5,700 and trade higher again as long as real conditions do not deteriorate. Even if we experience shocks, what you should be watching for is the data through the summer or laddering of economic warfare. I gave you a brief last week about economic warfare and how you should be reading it and checking it against what White House policy is, what China policy is, what China's telling their people, what the U.S. is telling their people. And if we escalate, does the tit for tat go higher or lower? Do we have defined grievances from the United States? We do not. We had one come out this week. I think the one that we had come out was IP finally. It's been stated in the past, but in this, going from a dispute to warfare, for the first time we had Trump say IP. China today coming out and saying they're willing to address fentanyl concerns, which I think is comical. 92% of packages that come into the United States meet the de minimis requirement. 92% of all imports are de minimis from around the world. It's an easy layup for China, but it doesn't solve the issue, does it? You can import illegal goods, not just fentanyl, but illegal goods from all types of different countries. If I was a distributor of fentanyl, I would just move the country that I send it in to the U.S. from. So we know the fentanyl argument is bullshit. It's just pure politics for Main Street USA. So as we head into the summer, there's some things for you to think about. If we go into the summer trade, you want to be concerned about shocks. If they happen, they should take place on a Friday through Tuesday. Those shocks to the market should not be permanent. They should be just fear, knee-jerk reactions, they're called. On the other flip side of that coin, You want to be watching for laddering or escalation in this trade war from the main parties, the U.S. and China. You should also likely see de-escalation and escalation over time as this finishes. You should believe that we're changing our economy, and you should believe that they're going to buy time until they don't. Right? At a moment, they're not going to. But for right now, they are, aren't they? We also have two cycles of strength. One is right now. One is from mid-April for single issue stocks, the end of April for indexes. It lasts into the beginning of July. Our next supportive environment is mid-September into February of next year. So if there was a bull case, I just made it for you. For all the doom and gloom, for all the McGilligot doom, for all the Fed chair doom, I just laid it out for you. Your unemployment, your GDP, PCE. Now, this conversation that I was having with two friends actually, a partner and a friend, was, hey, Cap, I'm scared. I'm like, yeah, I'm scared too. I'm afraid we're going to lose the weekly trigger and roll down at a moment's notice with all this FOMO and happiness and perpetual optimism and exceptionalism of the United States. All this is fine until it isn't. So you have to hedge yourself on weekends, right? Or be positioned in a way that you're not going to lose in a shock. Or if we ladder warfare over a weekend, right? We escalate. You have to be aware of those things and positioned for it. So ratio spreads work. Bull ratio spreads, bear ratio spreads. Counter trading futures with cash underlying equity markets during the week, over the weekends particularly, would be another way to do that. And you can have both of these viewpoints. You don't have to have one facet viewpoint on the economy, on the effects of it on the stock market. You can have both views. You can say, you know what, Cap, you just showed me the bull case. You just showed me the bear case. How do I apply that? And it's easy. We're looking higher right now. We realize that there's shock potential in May, mid-month around OPEX on the 16th into the end of the month. There's a window of weakness. That window of weakness can be up, though, too, can't it? We have some nice gaps down below to close. We now have the bull case that goes counter to everything you're consuming out there. All of this is Fed data or comes from a black box from the Bloomberg terminal. And you realize that the AstroTurf will be turned on and off by the parties that are concerned. Now, if there was some risk out there, I'm going to talk to you about it here in just a moment, like real risk outside of shocks or laddering of warfare. And that would be the commercial real estate market. And the reason I want to talk to you about this is because my business partner, we're talking about, you hide the money from the government or from companies. If we have a spike in inflation, knee-jerk reactions, we still have QT, quantitative tightening, going on. You see the mad rush into gold. We're not quite at a cut, but we could be. Maybe we leave QT on. We get a cut this year, but maybe not this May. If you see a roll of the herd money out of gold, where does it go? Some of it will go to emerging markets, foreign markets, but something else is happening in the background. So if we devalue the dollar and we suck it out of the system, if it isn't going to matter what I buy, what could I buy? And I was talking to my partner and I said, I'm starting to look for factories and manufacturing facilities. I'm actively here in Detroit. And I'm looking for what's left over of commercial real estate. If we're going to change our economy, Great Lakes region's pretty good, right? One of the home of manufacturing. It's comeback kid, rising Phoenix. Got great ports, great waterways. Have steel mills being reopened. Nuclear power plants being reopened. EVs coming back to Michigan. Lots of still unoccupied commercial real estate. Now, let's say I buy a property here, 10,000 square foot manufacturing facility, and it's going to be worthless. That's okay. As long as I can put what? A business in there, not mine. I can't afford all that equipment that everyone's investing in, right? I don't have that money. You don't have that money, but they're spending it right now. We're up 21% in buying that equipment. We built factories, or we bought land and built factories in 2022, highest record in history. We're now moving into highest records in history of buying equipment right now. And there's a crisis going on in the background of the economy. Multifamily CMBS delinquency rates begins to spike. We're back to the financial crisis in 2008 spike. Commercial real estate. Delinquencies of office mortgages that were securitized into commercial mortgage-backed securities, CMBS, have been in the red-hot zone since mid-2023. So my business partner in real life, I'm here looking for these commercial properties coming onto market. If I can have cash flow continue in, it would likely be in this new economy, not doing the manufacturing. Who the fuck wants to manufacture anything? And you know what the cost is to build out, not build out, but like get that equipment, hire those workers, the time associated with that. Effort. I'd rather just own the building and have you pay me. If you fail, I don't care. Put another manufacturer in that space. And lo and behold, what's coming on the market right now? Commercial real estate market is starting to see an unclench. Delinquency rates are through the roof. The Fed and the Treasury Department are all unwinding their holdings. The commercial real estate meltdown just does not let up. Delinquencies of the office mortgages that were securitized into commercial mortgage-backed securities have been in the red-hot zone since mid-23. In December 24, hit 11%, surpassing even debt meltdown during the financial crisis. Then during the first 3 months of 2025, the delinquency rate backed off some, but in April, respiked again by 52 basis points to 10.3%. The 52 basis point increase of the delinquency rate represented a U-turn from the feeble signs of hope earlier this year and put the delinquency rate back into the peak financial crisis meltdown. A flight to quality has divided the office market into two. Amid much reduced demand for office space, vacancies in the latest and greatest buildings allow companies to move from older office towers into new fancy offices, while downsizing space at the same time. But landlords of older properties, this is not me. We know this, right? This reminds me a lot of buying properties here in Detroit in the turn here. But landlords of older properties have trouble finding new tenants to replace them, and their vacancy rates have soared. This is good news. Not for those people, but for me to swoop in and pick up for pennies on the dollar. It's those older office towers that are on the problem list, not the latest and greatest towers. The office sector of commercial real estate has been in depression for 2 years. The office vacancy rates in the U.S. worsened to a record 22.6% in Q1. But it's now multifamily rental apartments that is chasing after it. Multifamily is huge and delinquencies are turning ugly. Look at this right here. It's bad. Bad, bad, bad. If you wanted something current right now that's growing worse, it's this. This is actually good for you. How often do I tell you to never buy into FOMO? You're always looking for blood in the streets, doom. You're looking to step in when no one else will. When it's the worst, when someone else is losing their ass. I want to read to you one of the first comments. Keep your powder dry. Over the past 10 years, LoopNet has had limited to no offerings for multifamily in my area of the Great Lakes region. Over the past 6 months, I am seeing more and more pop up. There is still no buying opportunity, in my opinion, but seeing some hit the market is a start. Commercial, industrial space has been available and matches exactly what Wolf writes. Older buildings are tough to fill, while newer buildings are still performing well. So right now, commercial and industrial space is prime. So the second person I spoke to, they said to me, well, what are you going to do? I said, I already bought some land with some timber on it. I said, we got no more timber coming from Canada. You guys remember I bought that land, right? This is pre-tariff, just before, right? I sold houses here in Detroit, consolidated down. I rolled some money into state auctions in Michigan for timberland. Now we're not taking timber from Canada, are we? What's the next thing that I'm looking at now? Where can I park some cash? If we're building factories and we're making equipment, I might not be at the top of the tier. I'm not rich. I'm not filthy rich. I got some money, and I got people I know. So I talked to my business partner 2 weeks ago, and I said to my business partner, well, I'm looking at commercial real estate, industrial space. If we're going to move some manufacturing back to the U.S., I can get a pretty decent sized property and just hold it. You know what I'm saying? So that's what we're doing. We're doing that right now. Literally. We're doing that right now. Actively going and looking at 10,000, 20,000 square foot properties. If the economy turns to shit, right? We have a new economy. You have consolidation of manufacturing. Companies go, I want to build a space, or I want to build out I found a new guy I found the equipment to make, I don't know, Zipple bottles for grown adults to suck off the teat. I can't get them in China anymore, but I bought the machine that makes them. Now I need a space to manufacture them. Well, I want to have the space to offer them. They can pay me cash every month. They'll be happy. Well, Sunday Never Ends just brought up another good point. There is a possibility, if this happens like that, where we don't return to all-time highs, we will likely switch this show to other issues, right? We'll focus more on like the LMTs, right? Like Lockheed Martin for war. Focus on CAT. Focus on individual stocks. I just showed you the growth, right? All the money being spent. Oil should bottom this summer, right? Sunday Never Ends. We might be the oil show. Instead of the stock market show, we'll call it the oil show. So if we don't get the returns on indexes like we want, right? The outsized growth. How do you get returns on indexes? We know how, right? Real cheap dollars, right? Where we're manufacturing around the world, where our economy is based like that, we devalue the dollar more and more and more and more. If we don't get, we can get that shit intraday trading. So you can make a lot of money in SPY, Qs intraday, but you can't just buy SPY and expect the returns you've been getting if we're going to change this whole economy, right? You're not going to get that. So we could switch the show to individual issues, right? We could intraday, day trade SPY. We can't invest in it. But we could in other issues, right? Single stocks, single issues, emerging markets, foreign markets, oil sometimes. I think oil bottoms, in July. You should expect a bottom. We're almost there, right? We've been talking about that in this show for how long now? A year. Longer? About a year. I've had people yell at me for a straight year about that. You're wrong, Jim James. It's going down, isn't it? I told you this summer, the bottom in oil. That's where we're headed, isn't it? So I don't know if we do that or not. I don't know the outcomes to all of this. We don't know if they're serious. We think they are. All the stuff in the background says they are, doesn't it? So we'll trade it like it is until something materially changes. For now, outsized returns likely off the table. Possible shocks this summer. Look to move money with the herd. And there's some potential in commercial real estate. We've got factory space available. We have some commercial real estate coming available, office space in the future. We've got multifamily homes that will likely bottom out. We have the real estate market for residential. It doesn't matter right now, but could. Residential real estate lags with Fed reporting by about 3 months. So we can see in the future, we already know that the residential real estate market is having a tough go of it. It's hyper compartmentalized by region, of course. But those opportunities are opening too, right? So let's say we do this big economic change. There are places for you to hide money with potential regular income. We still haven't seen. Yeah, we're good here. Let's check this. Just check the market here really quick. We got the high right here. This is a high or low, right? Or this is a lower high right here. Just a note. They missed it by a penny. Should keep going down here. We haven't gone down enough yet. We still need to go lower. In my view, we need to go lower at least. Still haven't gone down to the strike down here. We got the high right here and a miss by a penny right here. Likely more down to come. Not guaranteed, but likely. If you want to execute this next long higher, we haven't hit the low yet, in my view. Still trying to smash up and hit 5,700 and get above it. This is likely 5,700 and SPX. We want to get above it and hold it at least. I'm going to read some black box stuff to you real quick. China begins to exempt about $40 billion of U.S. goods from tariffs. Bloomberg saying China has quietly started to exempt some U.S. goods from tariffs that likely cover around $40 billion worth of imports in what looks like an effort to soften the blow of trade war on its own economy. A list of exempted U.S. products covering 131 items like pharmaceuticals and industrial chemicals have been circulating among traders and businesses over the past week. It's unclear where the list came from, and it hasn't been officially confirmed, but at least a half dozen companies in China have been able to bring in goods from the list without paying tariffs, according to people familiar with the matter, who asked not to be identified. Take a look at pharmaceuticals. According to the Wall Street Journal, China is considering the trade talks with the U.S. if Washington shows sincerity through concrete measures. That is the laddering of tit for tat and trade war. Yields are jumping higher in response to better than expected labor market data. 2-year was up 5.1 BPS, 10-year was up 5.7 BPS. Trump says billions of dollars pour in from tariffs. NVIDIA is tweaking AI chips to be sold in China, according to the information. This is on another report from NVIDIA. Goldman on yesterday's flows. Our floor finished plus 1% versus the 30-day average of 19 BPS. LOs and HFs finished slight net buyers with the highest velocity of buy tickets during and around the open. Desk flows were constructive across TMT with sizable demand from the LO crowd and mega caps and peripheral plays. This is new. Coming into today, we had not been seeing significant long buying in single stocks from our largest longer duration investors, living in a, quote, buyers live higher tape, giving large MF underweights an HFLS ratio across Mag 7 at 9-year lows per GS. The ultimate pain trade from here feels like a Mag 7 led rally. What are we doing right now? Mag 7 rally. HFs, long short funds, COTs, CTAs, vol control funds become slightly constructive above 5,600, become very constructive above 5,700. Breaking also this morning, Canadian Prime Minister Mark Carney will meet with President Trump Tuesday at the White House. Punchbowl saying that President Trump's fiscal year 2026 budget would increase defense spending by 13%. Non-defense spending minus 23%. Your boy Elon Musk said he was going to save $2 trillion. Failed. Saved $160 billion. But also spent more deficit, more than the 160 that he saved. Deficit looks good. All kinds of negativity on Apple and Amazon yesterday, but then JPM comes out. Remember this morning they're telling you, don't buy Apple, man, we're downgrading them. JPM coming out and saying on their results, a healthy quarter, almost bang in line with their buy-side survey results. I read the guidance from yesterday from Apple. Tim Apple, what did he say? We'll just raise prices. We don't care, right? Responsibly raise prices. However he put it, I thought it was hilarious. iPhone led the revenue beat, but iPad and iMac were also stronger. Nitpicks would be weaker GM, and for some, a disappointment that there's not a more of an upbeat or a beat from pull forward in demand. Greater China up to 16.8% of revs, boosted dividend a penny, and authorized $100 billion buyback. New capital return always announced this time of year, so no surprise. Results were roughly in line with our bars, though GM was a bit weaker, and the overall demand picture doesn't look much different than what we've been hearing elsewhere. But there isn't much else good to share beyond that. And the unusual transparency that management provided on costs underscores the seriousness of the situation they find themselves in. And they were pretty honest, weren't they? I read the guide yesterday, this middle of the night, I think. I haven't slept a bunch. I've had to consume a bunch of information the past 2 days. Ditto dropping the services guide, an admission that they don't know whether they'll get an injunction. There was unfortunately also nothing new on the personal Siri, where CEO Tim Cook left it open, saying only, quote, "We need more time to meet our high-quality bar." Bulls pointed out that the company is managing what it can control. That's the gist that I got yesterday, too. They're managing what they can control, and they're willing to raise prices if needed. They also, yesterday in their guide, said something about being inside the inner circle of all of these trade negotiations. Bulls point out the company is managing what it can control, moving manufacturing geographies and managing risk, and point tariff impacts that seem manageable so far. This all ties back into looking for what? Shocks, but also laddering and warfare between the U.S. and China. Bears tend to believe there's been a pull forward and highlight that the third quarter GM guide is already a miss relative to consensus. That's true, but we've already priced a lot of this in, haven't we? Our buy-side survey was 46 extend their lead in the AI race to 0.5% versus company guide of 45 to 46%. And that's with lower tariff build ahead and mostly only at the IEEPA related 20% tariff. They also point to China weakness. A note here. As we approach this target right here, I'll just write it. I'm not even going to say it public. Well, what you want to be watching with trade war stuff from China, truly, it was in that brief I put out. You want to be listening to the official sources, right? They come out, they usually come out on Weibo. Is it Weibo it's called or something like that? I think it's Weibo. You'll get government, we get it here. We get the alerts from when it's an actual government voice speaking. But the other one you want to be listening to is what they're telling their own people. if you study warfare, it's very similar, whether it's economic, cold, or hot warfare. You want to always be listening to what they're telling their own people to. Like, what is the message? It's very important. It's very important for you to listen to what Trump tells you to. Like, are we negative, angry? Are we blaming China? Are we making bad guys? Are we making good guys? All that stuff matters. You want to be aware of that as well. You don't want to really be listening. I mean, you want to be listening to what America says about that stuff too, but more from the perspective of what they're trying to tell you to think. Does that make sense? So like you remove yourself, you remove your own perspective. This is a very key part of life here. Let me explain something to you guys out there. I'm getting older here, but when you look at these things, you try your best to remove yourself from your own opinions. Try to remove yourself from your own politics. Try to remove yourself from all of this and be pragmatic and objective, and then look down into what's happening. Like, who's speaking? Who are they speaking to? Who's the receiver of the information? And then you want to think about, what is that party trying to convey to the other party? For what reasoning? Not what you think or I think or reactionary to it, but be sitting outside of it. That's a very important skill to learn in life, to be able to observe and then say, well, why are we doing this? Why is that party one saying this thing to party two? What is the intent from party one? And then what is the reaction expected from party two? And then you also want to see what is the reaction from party one to two. Does that make sense? So you're like, what is the intent here? And then what is the intent from the receiver? And what is their reaction to the intent from party one to two? All important things. And then you also want to be looking at the true actions of those parties, even if they're different from what they state to those parties. If that makes any sense, I don't know, but I'm not wording this properly. But if you can do that, the easiest way to describe it would be objective, pragmatic, and always attempt to leave, especially in things that don't involve Main Street stuff, leave that shit at the door. Try to leave your politics at the door in this case. There are other cases too, where it's not politics driven. Right now it is. It's like government policy driven, politic driven. But we move away from that in other time frames, don't we? All of a sudden we're looking at, I don't know, it's like Biden didn't really affect the market, did he? But we had other things that affected the market, didn't we? The focus then shifted to other issues and matters, right? All of a sudden everybody's a armchair qualified insider on this issue or that issue, whatever's driving price or used as an excuse to drive price, right? Show me the price, I'll tell you if the news is good or bad, right? Kind of a thing. Always remain pragmatic. It's important for you as a trader and investor to do that. Separate those things so you don't get poisoned by the message. You don't want to get poisoned by that stuff. It can lead to really poor decision making, right? Especially if it feeds your emotions negatively or positively. You have to separate those things if you're doing this. You don't have to separate that stuff if you're just like, you got a job, you go to work, you pay your bills every week. You can feed into that. That's fine. But with what we do, you cannot. You have to be a sociopath to some extent. Yeah, it does for me too, man. I have a hard time with it. It's not easy. I'm with you, Repo, man. It's not easy, is it? And you can get consumed by it too. I do too. I have to check myself all the time. I've talked to friends. I've talked to business associates. But is this real? Is this fake? You know what I mean? What really matters here? What doesn't matter? It's not an easy thing to do. I can't say that it is easy. You can ethically remove yourself from that stuff. Now, there's some people out there that say, I don't even need to see that stuff. I can just trade without it. I'm fine with that too. But right now, this is what kind of is like in focus right now, right? I don't think anyone even wants this stuff. I don't even think people want those triggers to be or policy related from governments and stuff like that. But that's what it is. But I get you, brother. I'm with you on that too. Okay. So I think I've got all this, disseminated a bunch of this information out to you guys today. I think we've done a bunch on this. We're going to shift some gears here. It's 12:50 in the afternoon. I'm going to take a quick break. What we're going to do here is when I come back, we're going to now shift. We're going to shift focuses to earnings for next week. And then you'll get a brief from me consolidating all of this stuff for you in a nice, neat package for an outlook for mid-May, end of May, and then looking forward into July. And some kind of like, just like, this is what we're looking for. We'll write all of this stuff down for you so that, like, when we're looking at the daily bars, when we're looking at major prior inflection points, right? And then we'll look at the trade as a whole, right? Multifaceted. I want you guys to know, I have to always say this to you guys. I don't know why. It's got to be because of what you consume out there and the regurgitation and all that other shit, but you can have multiple viewpoints here. You can easily say, hey, man, I'm fucking full bear here, bro. Economic meltdown. And I'm also open to the trade to all-time highs or 7,200. You don't have to squirrel and pigeonhole yourself. You don't have to be like, I'm just this or I'm just that. You just need to be aware of all of the if this then that's. Does that make sense? If this then that. I got you, Cap. We start losing support. We start rolling down into the weekly trigger. I'll get my bear suit on. We start blasting up. We'll do that, Cap. Does that make sense? I just want you to be aware of all these different outcomes. There is no magic crystal ball. There is no furu. None of that shit's real. Don't expect that out of yourself or anybody else. Don't expect anybody to pressure you, or don't be pressured by anybody to take a stance. We have to do this. We're going to do that. It's in stone. Don't do it. Just be aware of all of these different opinions or data or news or what's really happening. Have a firmness in that understanding. And that way, when you listen to someone telling you something, you can consume it and say, oh yeah, but you know the other side of that coin. Does that make sense? Or why are they saying this? Or why are they saying that? So those things are all real, right? That we discussed today. All those things are real. They all matter. We really want to do is see how future information relates to the shit that we actually know is true. Make sense? I think so. I hope it does. At any rate, I'll be back with you guys in a little bit. We're going to focus on ERs for next week. Then we'll wrap up the day into the weekend. And you'll get a brief from me over the weekend or today at some point if I can get it done. There's a couple other notes I have for you here. Hold on here. Next week, I will be on stream on Monday. I don't have any doctor's appointments on Monday, so you won't get an office day of any kind from me this week. You'll see me here streaming Monday through the end of the week. Friday, I do have doctor's appointments, but I think I'll be here for most of the day next Friday on the 9th. And I want you to know that we are switching up I want to make a quick point here to you guys, if you're watching right now. We are going to be reformatting the show to a live stream for the public, 10,000 people a day, right? And then we're going to also be rolling out a private stream where we're not giving away as much direct stuff exclusive for just our community. geared towards our community that support what we actually do here. Because what we do here costs a lot of money, costs a lot of time and effort. So there's going to be some kind of a change coming up. We've had a lot of input from our community over the past couple days, and we've been meeting about it we met 2 days ago about it, and I think we're meeting again over the weekend to try to roll out some kind of a new format as we grow. So I'll be back with you guys just a little bit. We are very close to this right here. I want you to also know it's 1 p.m., right? We know about the times, like, 2:30, 1, 2 o'clock in the afternoon, people start wrapping stuff up. One more thing, too, before we go is we could see a gap up over the weekend. We'll talk more about that. I showed you earlier that prior example of that happening. Let me see if I can go back to it really quick before I take a break here. I'll show you a couple things here that are important for you. We're going to hide all this here. Do I even have to hide all this? I don't even know if I do. Push to a day because we're going way back in time here. What I want to show you guys here that's important is, oh yeah, I got all that laid out over there. We watching all that stuff. I want to show you this right here that's important, okay? See, like these, I want you to look at these dates here, okay? This is a Friday. Okay, so I want you to see this. We got the gap up here on a Friday, right? Hold on here. Hold on. I want you to understand some of this stuff. You got the gap up here on a Friday, right? This is Monday. Friday, Monday, right? So you got Friday. And they sell us down on Monday, right? Tuesday. Consolidation next week. Right? And I want you to see this in particular. Monday, Tuesday, Wednesday, Thursday, a high, sell Friday, Monday, Tuesday. Okay, so what I want to what's important for you to see here is this. You've got this move to get above the weekly trigger. Now, this might not play out exactly like this, but you get the pump up over the weekend, the pullback next week, right? We got reports coming out next week, right? And what McElligott is talking about is once we get over those, get over this stuff, you see this like 16th, 17th in here. This happens to be August, but his point here is you get the consolidation and the window of weakness to the downside in mid-May, right? Instead of the window of weakness, though, in August, we went up, didn't we? So the window of weakness, the market able to move, this is very important, by the way, pay attention, can also translate to a window of strength, okay? So we break above the weekly trigger. We spend a week of consolidative action. Are we getting new highs and higher lows? Or are we trading like this, right? Or sideways? Are we doing this? When we come into next week, right? Today is the 2nd, right? Next week would be the 9th. Right? Or do we do this? Do we do the consolidation, and then the week up into the 16th, sucked right back down to blast to the downside, right? Either or, right? That third week trapped in to go down, or do we go up? This would tell you that we're going to do the what? We're going to do the summer trade, aren't we? I also want you to see something else here. If we blast up here into the 16th, 17th, look at this closely here. This is the 16th of August. McElligott told you he gets bearish there, right? In April. So if we do a consolidation week next week, we blast up into the 16th, 17th of May, right? Window of weakness opens up, down, depths of hell, right? Or do we get that May sell signal, sell in May, right? Close the gaps. This is prior history, but pretend this is now. Close the gaps and come right back up and up away into July. Out of here. Close that stuff out. Out of here. Away, middle of summer. Or do we make the next leg down into the market here? Just keep that in mind. I'm going to show that. You want me to show you that again? One more time. Pure gold right here. Free. Up into Friday, down into Monday, Tuesday. Up, consolidate, trade range. Blast up into the 16th and 17th. Window of weakness. Do we go down and up? Do we go all the way down? We just keep going higher. We know something about this, don't we? If we're going to close these prior highs, we got to be moving, don't we? Take that one out, back test that one. Take that one out, back test that one out, back test that one. Window of weakness, hold or not hold. Big inflection point around OpEx, isn't there? Thanks, Tippy. I appreciate that. Sometimes I do. Sometimes I say offhanded remarks. I mean not to. I don't mean to. I appreciate that, Tippy. I try to keep that shit separate as best I can. Sometimes I make snarky shit comments, which I shouldn't. I do apologize when I make those comments. I go, I'm sorry, I shouldn't say that. I do mean that. I don't mean to make those comments. It's hard sometimes to do that. I used to, like, when I was like years ago, I would involve that stuff in my trading, and I got smoked too many times. Some of my largest losses were doing that shit. You know, believing that shit. I took an L one time for like 120K or some shit like that. One was 90, one was 120, 130K. And it was on like the big crash was going to happen, just like this. And I was so deep inside of the we're gonna crash here moment that I just went balls deep. I was like, this is going to happen. I was an uninformed trader too. It was like all puts. It wasn't like a bear ratio. I could literally have saved all that fucking money if I'd just done a ratio. It was so insane. It's tough to yank yourself out of that. I wish I had someone like me talking to me then. I really do. I wish I had someone based in reality saying, "Hey, man, you just don't know. You're not smart enough, or not smart enough, but not enough wisdom that even if you have that bias, that there's trades for you to take." Where you're not going to get fucking annihilated. And I got annihilated. I'm not going to lie to you. I got fucking annihilated. And it was the worst experience. It was horrible. Like stopped trading for like months, I think. I think I went like 1 or 3 months without trading. I was so fucking angry at myself and stupid. Then I started like doubling down and shit too and add more money on the money pile. It was terrible. Fucking terrible. It was the worst thing I've ever done. Like hindsight looking back on it, well worth the look back up for my own problems with my own trading. I fail at shit all the time. I still have mistakes. Yesterday, I knew that target lower was there. Even said it on the show. Still got sucked into it. Still like I'm gonna buy that ride on Amazon and Apple, and we're in positive gamma. I should know better, and I even said it. So it's important to remember that stuff. Even right now where we are, being aware of all different facets, being open to all different outcomes, and being positioned appropriately for those different outcomes. Being able to change your opinion at a drop of a hat too, very important. Especially as who's speaking tells you, right? Like this week, like last 3, 4, 5 days, I'm watching the shift in all of a sudden it's all good news. We're working tirelessly, bro. We got teams working with 200 countries. There aren't even 200 fucking countries to do business with. This is just it's pure fucking absurdity. But what does the message mean, and who is the message directed at, and why is that message out there? Because we're going up. That's why. So it's important to identify those things, be pragmatic about them. It's okay for you to be super bear. It's okay for you to be like doomer. It's okay for you to be super FOMO and super bear. Not FOMO, but like, hey, we're going all-time highs, man. Economy's coming back. Stock market's going to go to 7,500. That's fine. Just be aware of, or an awareness level of what the real message is, or what the message is versus the reality and versus price action and stuff like that in the stock market. All right, I'm going to take a quick break. Back with you guys a little bit. We're still holding right now. We're still holding here, guys. We're still not done. We need to see what? Our rules, right? We have rules, don't we? We want to see the completion of a bear plane to go down, don't we? So we're not there yet. Oh, I've blown even worse than that. I used to trade zero. I don't do it anymore. Not that. Sometimes I'll get up there with like 10 grand or so, cumulatively DCAing in a day, but it's all broken up now. I hide trades now. Like I'll do them in smaller batches. But years ago I used to go in and just fucking load up 300 packs all at once. Like fucking 30, 40 grand and shit, 100 grand, $90,000 trades all the time. I don't do that anymore. I do it with like buy and spy and shit, but I mean like zero dates. I'm talking zero dates. That trade with the puts, I've done 2 of those trades that I've gotten blown up on. I've lost like 90 grand once and 120K another time. Something like 130. I think it was 130 grand actually. I'll try. If you want, I'll try to dig that shit out. I've shown that shit publicly before. I've shown the actual like paper. I've printed them out. Every year when I do taxes, I print like my fucking stack of paper. I don't do it anymore, but I used to print them all out. It would be like a stack of like 100 fucking sheets of paper showing all my trades for the year. And true. But I don't normally lose I don't do that. I don't trade like that with zero dates anymore. Nor with that kind of a setup anymore. Not like that anymore. I don't know how to explain that better, but if I put a trade on like that, I counter trade myself if I need to. I'll pull sides of trades off. I'll chase the other side. This is a time when I would like. This was a time when I would be like, I'm not gonna name names, but like Furu's out there, like we're gonna fucking swan dive here, and I would just like put the fucking puts on and be done. Like sit back and lock myself in the bunker and fucking chain myself up to the wall and not come back until they went to zero or printed massively. Right? That's the wrong way to do things. Can't do that shit. It just doesn't work. You find out eventually. Same setup as earlier. We're going to look at this again before I take a break. I'm trying to get out of here, take a break, take a piss really bad. We're going to draw this in. We're going to draw this into. Hold on here. We'll do this together. Hold on a second here. Let's do this together really quick. Trigger screen, full screen. This works on any time frame. We have an island. We got Poop Island, right? Look at that. Poop Island. It ain't pretty. Got some like. It's got some vapor coming off the top. Pile of shit vapor, right? Off of Poop Island. And let's say you're long right here. We're in positive gamma, so things move slowly. There's some rules we need to know here, right? One, that dips should be bought. Dips should be bought. Market should move slower to the upside, not faster. It shouldn't be straight up. But once we consolidate, there should be a move higher, right? We also have some trading rules here, right? We've got, we don't know if this is consolidation or distribution yet. So we got this one right here. Make that yellow. Right, we got a red bar up here. Fairly easy to see, right? We also want to be looking at the instigation of the trade. That's over here. We got the pump trade up here. Right? And then we have the next move higher. That one sits right here. I want you to think about this really quick. There's a little bit of an expansion on earlier lessons, but I want you to think about these moves here. You have consolidation or distribution, right? Up, down, up, down, up, down, up, down. They reached down for liquidity, way down there, and then we moved higher, right? That's this right here. That's that liquidity grab right there, right there. Okay? So, what are we looking for here? The way, believe it or not, is what right now? Still higher. Still higher. Move that over. If we think it's going to roll, we're not instigating the trade in here at all, are we? We'd be looking for... So we got weakness from buyers right now, right? We've broken this one already right here. We're going to look for failure of demand and a new low down here, right? In this case. And then we're going to be looking for it one more time. And then the downside move. We want to be looking at the last pump right here, right? If there's no more demand above, we're going to revisit this one minimum, aren't we? So we're going to move this down right here. Right? We're also going to look at this prior low right about there. And we'll look for that next one right there, right? Kind of matches up too, doesn't it? That white line right there. Now let's think about something else. If that's the top intraday for now, and if we break below this, we would erase the entire move, wouldn't we? If we don't, we'll hold, won't we? If we break below, we'll just draw that in for now. If we break below this, we would look then for, if we don't, that's the bottom, right? If we break below it, we'd then look for the next layer down right here, right? Take the whole move away. Either price or time, we can move this over. Doesn't need to be there. We can move this all the way over. Price or time, right? So we're not going to draw this in right now. We don't care about it. We're going to make this dotted. We haven't confirmed the move yet. We did get the new low down here. Right? Yeah, we got the new low right there. I might have drawn this wrong. Hold on here. That's all you need right there. You got it. You're going to look for the rejection somewhere in here, and the next move is right here. And I want you to remember one last part here. Sorry, I missed one thing here. The reason why I'm drawing these, the reason why I keep this in dotted and not full line is why. Because of this down here, right? You can see it, right? They swooped down, grabbed liquidity, and we didn't get the cross, did we? Look at the red line here and the white line. We never got the close, did we? So there's a trap there for bears, isn't there? Sellers, right? So we want to see the price action, do all this nonsense, whatever this is, doesn't really matter. What really matters is you get the failure and you get the close of the 1 and 5 minute trigger. The moment you see that, it's on like Kong. We're going to the downside, and we'll switch this to a solid line here. Now watch this liquidity grab right now. Just reaching on down right now, digging down deep for liquidity. The one thing we don't want to see is we do not want to see the break down below. Let me just do this better here. Bam, 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 bam up there. Bam, 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 bam down there. And the real sell is right here. That's where the money is, right there. I know you're thinking there's a bunch of money in here, but there isn't. And why is there not money here? Why is it dangerous? You're down here trying to get short, and they squeeze you all the way up here. Now you're upside down in your trade, and they run away with you above. You have to be patient right now in positive gamma. Be extremely patient if you're a bear. Extremely patient if you're a bear. Extremely patient if you're a bear. Extremely patient if you're a bear in positive gamma. Watch as this plays out. Extremely patient. See that lines, these lines up here? There's a reason for that. We go down here and just dip our wick, and then whoop. Then you're now trapped. You want to see the conclusion of this over here, and then get short as fuck over there. That's where you get short, down there. Don't get all bared up just yet. You can get sweaty if you want and grow your hair out a little bit, but don't get all crazy just yet. I'll be right back. I'm putting the new squawker back on for you right now, too.
Canada's Prime Minister Carney spoke with Japan's Prime Minister Ishiba. Carney says Ishiba talked about deepening trade and defense and commercial ties. Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Just a note here, there's still no shorts. Still no short. Still invalid, this trade right here. Need to see failure by buyers and get under here. We're close. This looks like another trap still. See that 1 minute and 5 minute? We're still above it here, so don't be fucking around. There is going to be buyers attempting to step in here. They want to get us above 5,700 into the bell. If you're looking for a short, it's possible that it's end of day at like the close. As a matter of fact, they just took that out right there. I mean, we could even slip down here for a moment just for a liquidity grab to go higher. Be really careful in here. You need to see this break here. See this one right here? You need to see that break. That one needs to just break. That's it. Then we can start getting short over here on a failure right here, but don't get sucked in. Don't be getting bared up. I'm going to warn you guys. You got to be, if you're selling, you got to be patient here. Got to be patient. And there is a reversal. There is a reversal candle here, but be really fucking careful, okay? This looks really, it looks constructive into end of day.
According to Logic, Canada provides IBM another 210 Canadian million dollars financing to expand.
So we had a tweezer candles here to the downside. We're now getting tweezer candles to the upside. We're sucking in sellers right now. Be extremely careful. Hopefully you're not short here. And we're going to try to run this bad boy up to the right. I can't guarantee this, but if you want my experience in this, they're likely going to take all your stops into the close today to the upside. If you were trying to short the market on over the weekend or into Monday, Tuesday, a better way to do that would obviously be the close today or Monday open. And if anything, we're in a bullish stance, so you should be more of a buyer of the dip than a seller of the rip at this moment. Remember, we're switching to sell the rip to buy the dip right now. Apple teams up with Anthropic on AI platform to write software. Apple and Anthropic partnership to be part of new version of Xcode. An Anthropic system will write, edit, and test code with AI. Apple to use software internally, still mulling public rollout.
So, according to the Wall Street Journal, Trump and Mexico shame-bomb spar over drug cartels, according to sources, and Trump is pressuring Mexico to allow deeper U.S. military involvement to fight cartels, again, according to sources. Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%. So just to bear in mind, the Wall Street Journal is saying that the discussion between Trump and Sheinbaum discussing U.S. forces happened on April 16th.
Oh, we're going to be playing music today in the show, aren't we? I'll be back here in just a moment. Just need a few more moments here to get off. I was in a quick meeting I had to take part of. So just as I told you earlier, we did not see this move to validate a roll to the downside. It was just a liquidity grab to the downside, roping more sellers back in for an upside move into the close here. We are moving into the 2:30 hour. As soon as I come back on the stream, we're going to talk earnings for next week. If you are watching the show right now, I did put expectations for the weekend, for your weekend to plan, and for the whole month of May for you. So if you need to make plans for the weekend, if you want to check that out, it was just a quick chart I put inside the Discord on the market chat. Go back in there really quick because I was in another meeting in there too. Back down inside of the market chat. And we're going to go over let's see if I'm missing anything here. All right. Just give me a few more minutes here and tight right there. Still waiting to get this new high here. So let's go back and look in here. Let's go look at this together really quick. Okay, so we got our bat wings, right? We know how this works. On here. Fairly easy to see, right? Do we have our dragon tail or do we have our bat wings? We know how this goes, right? We've got the equal high here coming into this next high right here, right? We're going to find out really quick, aren't we? Do we get the new high and continue to the upside? Or do we fail the high? Boop, and begin to lose all of this and head to the downside, right? So big decision point into the close. I think it's up this time, not down, to be honest with you. But we'll let price show us the way. Excuse me. Just waiting for this last little bit right here. Excuse me here. Here is 5,700 on SPX. My thesis here is that we're going to try to kick in buyers for a positive week next week and a new range, even if we're dipping back down here. Right? So look like this for next week. But more importantly, you could say that we've satisfied this target here, right? But I would like to see us get up and above. And then we deal with next week. If you're in the Discord, you have what I think happens next week already. But for this target above, this like reach up and grab this thing into the close. If you're trying to get short here for next week or something like that, just be, you like to, if you want to see that happen, that short, you need to see, you need to see that roll. You need to see that, all that kind of stuff right there, and price action leading the way to execute that trade. Stop trying to stop trying to fucking front run a potential short at this point. And don't even, I wouldn't even take the short yet if we break above. There's no real reason for you to take the short again until the crossover here or the close, right in there. You'd want to see the price breaking below or something like that to get that short going. And even saying that, the trade is more than likely going to be up. So we're actually just looking for dips to buy, not shorts to the depths of hell. I'm warning you. I'm going to warn you again and again and again. And then we come back and look at it again and again and again. So I'll be back in a few minutes. Yeah, I'm with you there, sneaky CDN. You got to be like very, 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 you have to watch. This price action is very deceptive. It's been like this for a while. It's been like this for a few days, and it's going to get spicier this month in particular. So we're at this major inflection point on a larger time frame, and we're at this weekly trigger is this weekly trigger is a hold on here. This weekly trigger is a lot of faking out, a lot of penny this, penny that. A lot of trap. There's like mini traps everywhere. I think we were talking in the stream yesterday about so we had a private stream. Yeah, we tried to run. I tried to run 2 streams yesterday. It failed. So we just went with the private stream yesterday. But the private stream yesterday, we're discussing you really have to be a great trader to trade these next 2-3 weeks, in my view. Even the approach, I think even the approach to the weekly trigger or the approach to the let me go over here and like the approach to the net or to the traditional charting resistance, the downward rejection that we've been trading into the daily trigger, the weekly trigger, all of the mechanics surrounding that price action is all this larger inflection point. and it's complicated. It's easy. I think it's easy, but I think for a lot of people, it's not easy. I think for the majority of traders, it's not easy. I don't think it's easy. So um, there's landmines everywhere. Just be paying. You need to be like really focused right now. Anyone out there can say it's going to do this and doing that, but you still want to be watching that kind of stuff. Same thing with like, because we're in a, like high volatility, and we're also we've got like, you know, like people are expectations. They see SPY and they confluate it with ES and with SPX, and they're all different products doing different things. So at any rate, you guys, I think you guys get the gist. At least members do. We went over a lot of this in more detail yesterday in that private stream. Yeah, so that's the private streams. I post them inside the Discord. Yep, you get access to them. I post them multiple times in the Discord. So if you even if you just stop in the Discord and be like, "Hey, where's the link to the private stream?" Just say that, and we repost it for you in there. Yesterday's stream was outstanding. It was a great fucking day, and even today's open was outstanding too. And actually today, not even as smooth today as it was yesterday. So we have to do a lot of stuff for membership, and then a lot of stuff for the regular stream, and they're two different things. So it was nice yesterday to have that private stream. It was really nice, actually, to be honest. So what do we got here? Give me a quick. I took that break, but I was in a meeting, so I apologize to you. I still haven't gone to the bathroom. I've been having to piss for the last like 7 hours. I shit you not. I don't know how many hours it's been now. It's been was that 3? I think at 9 o'clock. So 9 to 2. That's 5 hours. I gotta go potty, and we still haven't looked at earnings for next week, which we have to do. So give me a few more minutes. I'll be right back with you guys.
Seeing NYMEX natural gas June futures settling at around $3.63. NYMEX WTI crude June futures settle at $58.29 a barrel, down 95 cents or 1.6%. Gasoline June futures settle at around $2.01 a gallon, and NYMEX diesel June futures settle at around $1.99 a gallon. Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
All right. Whew, that felt good. Oh, I really needed that. I really needed to go to the bathroom. All right, so all we need to do is get the new high here. Watch that tick. I was going to put some music on, but I don't know if we like do the tick, pull back, then higher. You know, like you do the tick right here. It's really all you need. That's what that line is right there. Nice little pullback up there, then bam. You want to watch this very closely here. Do we get this tick or not? We're going to talk about earnings. I always think like Ernie when I think earnings. There we go. So earnings for next week. Earnings for next week. I'm going to give you a quick review verbally for earnings. We've got Berkshire Hathaway. On Monday before the open, we get Berkshire Hathaway, TJ Therapeutics, and Semi CNA, Lowe's, Cummings. I'd be looking at Cummings. Check out Cummings. Let's look at a few things here. Let's just do this together. Or hold on, I'll just read them off to you. Oh yeah, baby. Give me that squeeze. Give me that squeeze. Give me that squeeze. Give me that squeeze. Coming in at 5,700 right now. Squeezing on up, touch 5,700. We're tapping that ass right now. Tap, tap, tappy. And there's more. See those targets above right there? You see them, those red bars up there? Hey, what's going on up there? Woo! All that. Oh, yeah, babe. We're going higher. We're going higher. We have more supply, even higher. Now, for earnings next week, some of the highlights include, I'll make it quick here. Some of the and then we'll come back. We'll revisit. We'll go top line first. So we're going to take a look. Personally, I think we should be taking a look at Tyson Foods, because we know that people are still spending money on food. We looked at that this morning. So we're going to look at Tyson Foods. We're going to do a quick look before the close today at Cummins, Tyson Foods, Cummins, because Cummins builds engines and shit, right, for equipment and factories and stuff. Tyson Foods. We're going to take another look at Palantir. I talked about them yesterday briefly in the private stream. We'll take a quick look at Palantir. We'll also take a look at Ford. And this is, of course, if we have enough time. So we'll take a look at Ford. That's another highlight. Hims and Hers, of course. Hims already ramping. And that's on Monday after the close. Palantir, Ford, Hims and Hers. And then on Tuesday, we've got some other big ones. We've got Datadog on Tuesday open. And then on the close on Tuesday, we have AMD. So we always want to look at Advanced Money Destroyer. We've got Rivian on Tuesday after the close. On Wednesday before the open, we've got Uber. We've got Walt Disney, right? Disney on Wednesday before the open. We've got Vistra, Unity, Teva, Flex. Can't look at all those, but we can look at Uber and Walt Disney. We can maybe look at Unity or Vistra. AppLovin, Wednesday close, big one, right? Cleveland Cliffs, Oxy, Axon. Thursday we get Peloton before the open. We get Shopify before the open. And then on Thursday close, we get Coinbase, Trade Desk, Wolf Speed. We get DraftKings, Affirm, Cloudflare, bunch of mid caps. We get Lyft, we get Dropbox, and then on Friday before the open, we get TerraWolf. We want to look at that one as well. So we got a ton to look at here. So we're gonna take a quick look. We're gonna stop. We're not gonna stop the show, but it's 2:39. We're gonna take a quick trip around these tickers. And I'm not gonna give you a full expectation here. I'm gonna leave that for the Discord if they want it. They want those charts done. If our membership wants any of these done, you'll get a more complete outlook. But we're gonna do like a rapid fire. Right now at this 3 o'clock, between now and 3 p.m., we're going to do a rapid fire. Just look at some of these companies and see what we can see quickly and easily with a cursory look for some expectations here. So let's do a rapid fire. Let's see here. Triggers. See what we can see. First ticker we're going to look at here is Cummins. And Cummins getting annihilated, right? But we know the truth, don't we? Cummins trading along with the S&P 500 right now. Hang tighter. I'm going to get some expectations on moves too. Hang tight here. Okay, we're going to do this kind of rapid fire style. I got a ton of stocks to get through here. If I'm bringing up a stock to look at, it's because we have some insight into potentially good trades on them or bad trades on them next week. An example would be Cummins and also Tyson. And why are we looking at these companies? Because we know what consumer habits have been and how they should report their earnings, either negative or positive. We know about people's dining habits changing. We know where their money is going. We know where money moved from factories into equipment buying. So there could be some surprises headed our way or some disappointments heading our way into next week. Whew, we gotta get through this quick. On the bottom side of the screen down here is where we're going to review these tickers. If you want to open a notepad at home or in your office and just take quick notes or revisit this stream later, you're more than welcome to. First ticker we're going to look at is Cummins, ticker symbol CMI. They are tracking the S&P 500 right now. On a daily basis, their velocity looks outstanding. Their weekly does not look great, but their daily looks wonderful. On a 30-minute chart, their daily velocity looks fabulous. Their hourly is okay, but they do report in the morning on Monday. Cummins has an expected move of 6.2%, which is outstanding. They also have into the middle of month of May, May 16th, they have an expected move of trading up to $320. Currently, they're trading $300 right now, $301. But into mid-May, they've got an expected move of up to $320 if they have a good report. Man, these are all wonky. I don't even know if I can. There's something wrong with this. There's something like broken in the background. At any rate, CMI, Cummins, I'm bullish on their earnings on Monday. They have an expected move of $320. That all puts them right below their weekly trigger. If you can find I don't know if you're going to find a way to buy a dip here. If you can get a dip buy at 300, even though they're sitting at 302, I have an expected move for them from me today into Monday or even end of next week if it's a delayed reaction into the middle of May. Price target $320 on them. Let's make sure I got this right here. Hold on. On the 6th, I have a target for them at $305. The halfback trade on them is 308. So I'd say trade 310, 308, 308.50, 310 on Monday, but then middle of month, a target of that $320. So bullish on CMI. Next one for Monday morning report is going to be Tyson. Now, Tyson, let's take a look at this really quick on Tyson. This is an interesting one. We know people's food habits have been changing. They're in this like diamond formation right now on a much larger time frame. Let me just show you this really quick here. We've got Tyson Foods here. On a daily basis, they're looking kind of weak, but on their monthly, they look outstanding right now. Their weekly is a little weak too. On a 30-minute basis, they look a little weak to me, but bullish. I'd say neutral right now. Oh, yeah, baby. Take it on down. Oh, yeah. Show it to him, baby. Woo! Now, there is something of note here. Tyson Foods has a monthly trigger that they're coming up. They're back testing right now. They're on there like they've got a confluence, a 1, 2, 3, 4, 4 trigger cluster, 6 trigger cluster on Tyson Foods. Oh, yeah, baby. Look at that dip right there. Yeah, look at that dip. Look at that fat old dip right there. Woof. Yeah. Oh, they're dipping their wick a little bit lower right now. The whole move is right here. Whoop. They're digging deep right now. We'll want to see if they get deeper on this move to the downside. Watch that white line right here. Is reaching down to the depths of hell. It's 249. Tyson Foods is in this weird place right now, TSN. Now, Tyson Foods has an expected move of 5.8%. I would look for Tyson Foods as a buy and hold right now. If we have recession fears, and we also are in this really funky, like, this week, or this, let me see if I can show you guys this really quick. There's Tyson Foods. What I really want to show you in this Tyson Foods, more importantly, is this right here. Forget your weekly and your daily. This monthly accumulation here is very bullish, extremely bullish. It's being accumulated right now. I want to show you a prior example of what that means for Tyson Foods. Yep, hold on here. Yep, wrong way. I think this is more of a long time hold. But what I really want to show you here is you see this accumulation here. Nice little ramp up. And then a monster move for Tyson Foods. And we have the same situation right now. Do you see how this monthly trigger, or you see how this says this monthly trigger swooped up? Hold on. This monthly trigger swooped down. Hold on 1 second here. So I want you to see this. This is a green line, but it should be blue. Sorry about that. I was being interrupted here for a minute.
Crude futures settle at $61.29 a barrel, down 84 cents.
This big blue line right here is showing a liftoff. And we're pounding in here, but for Tyson Foods, not so much their ER, but I like the idea of a buy and hold on this ticker today. It's $60. It has options. It's dirt cheap. If you're looking for something that's kind of like recessionary,
You want to stay up to date?
I like Tyson. For Monday's morning report, it's one of my favorite ones of the two that I just looked at, between Cummins and Tyson in terms of like buy and hold.
For the price of
I like Tyson Foods.
92%.
Go back to the normal screen here so you guys can see it. Whoop. Right there. We're going to go back to the trigger screen really quick. And we have our bat wings, right? We got our bat wing right here. Up, down. Normally what happens is we'll fail the new high, come down here, reject, and start heading lower, right, to the downside. We did get the new high, though, didn't we? We got the high right here. We still had the bloodbath we're expecting. A little bit deeper than expected, but more of a liquidity grab at this point. If SPOOs can go up here, right here. I want to buy this right now. I'm not gonna, but I want to. I don't have the time right now. But I would be buying this, but whatever. What you want to be looking for at this point is a return, and then the continuation to the upside due to this high being hit. This is just more liquidity being grabbed in my view. If this was going to become a sell, you'd be looking for a rejection in here, come back down, make the new low, and get short into the close right over there. Still no short, though, for me. Oh, hold on here. Back. Leave that over there for you to watch. So Tyson Foods, I like the idea of not trading options on them. I like the idea of buying that stock. On Monday close, we're going to look at Palantir, Hims and Hers, and Ford. We'll do these really fast so we can get through them today. PLTR we did yesterday for the private stream. And this is another neat one to look at here. So here's Palantir, PLTR. Hey, look at this. This is a daily candle. What does this look like to you? What did I just show you? A 1 minute chart with what? Bat wings, right? There's the bat wings. And we have what going on here? We have the prior high. Right? If we get the prior high on Palantir, you're going to be looking for not what you think. So we have Palantir after the bell. If you get, I think this is being front run for their ER. So you get the high, right? Then we sweep the low down here. So they're going to front run earnings on you, in my opinion. They're going to then swing you low in here, maybe sell the news or something, some kind of bad guidance. And then you're looking for that next move to go higher there. So you ready? Palantir. I've already looked at all of the other stuff for them, but I want you to know that you've got the front running of their earnings. It's going to, in my opinion, be a sell the news event, and you're eventually going to make your way lower over here and probably close this low right here, but you might not. You could possibly hold $110. There's going to be a reason. I don't know what it is. Split the stock again, maybe dilute it even more. But I am bullish overall on this stock to go up, up, and away and break out and trade a new level higher. But I want you to know that if you're a Palantir bull, that more than likely this is being front run, and that the market will be weak likely Monday and Tuesday. And you might get caught up in that between now and then, okay? So this stock in particular, mostly been front run at this point. And that has to do as well with velocity. I want you to know that I'm, depending upon price, I'm bullish on them into their earnings, but I think it becomes a sell the news, take the money, and run. Either now, between now and their ER. I would be attempting to get out on a failure of 128.50. We're trading 124.04 right now. If you can get 128.50, get out. If you're a degenerate and you think it's going to go to a failure of 150, cool. I get it. I understand, Palantir gang. You want to capture that big move, but you missed, in my opinion. The move has been completed. The rest of it is just squeeziness. I would be looking lower at 110. I would be looking to take profit, today, tomorrow, or today, Monday, Tuesday, and then look for a dip buy at 110, 100, something like that, for that continuation move higher. Next one is going to be him and hers. HIMS. I like this stock a lot. It's been moving like crazy. We're going to take a closer look at this stock on a daily basis for So this is HIMS. It's a gorgeous, gorgeous stock. The weekly is just being accumulated now. Looks like we're tipping our wicks higher and accumulation on a monthly basis. The daily looks gorgeous, coming neutral to up, looking for giant moves on this one to the upside on a 30-minute basis. Hims and hers. They're a little long in the tooth on an hourly basis, but their daily looks great. So let's chat about this one really quick. They have an expected move into their ER of only 1.9%. Into May 12th, they have a 16% move, and into May 30th, they have a 23% move. So let's talk about that really quick, because I think this one's more complicated. I want you to look closely at this prior high up here. HIMS has a prior high at 42.92. You also have another prior high back here at 45.89. You have a natural resistance at $50. I'm open to this trade higher, but in truth, I think it's similar to. I think it's similar. I agree with the target up here of going way higher, doing this same thing up here, $75 going up here. But I want to warn you of something, and then I think that this move is done as well. I think that you're going to get the drop into next week. You're going to fail this. You'll then hit your target of $45, then hit this daily down here, and then you're off and running. And I think your expansion is going to take place. It's going to take longer for your expansion into deep into like May, June, July. So for HIMS, sell the news. I got sell the news up here at 42. I'd like to see the new high at least. So 45. And literally having to buy this one more time. Let me just check this one more time, make sure I got this right here. Get the one, consolidation, the two. Something like this. Yep, something just like this. You're going to go into some consolidation of some kind. I don't know why you're doing that, but. And I can see that later in the month. Like right now, you see these dates down here. This is May. Your print, you're not getting it until late month May. And I'll draw it just like this for you. 1, 2, 3, 4, 5. Something just like that. 1, you already got it. Done, down, got it. New high right here. No payout on this ticker until late May. Maybe even June. Move being made early. Upside target on HIMS on their ER. 48.5. Late May target, 57.5 here. Plus that kills the halfback trade. So bullish, like it, like the stock. Late May, big print. Put a lot of time, a spread on it to get that print. Put it into like June and July just to catch that action up there. Their velo looks outstanding, by the way. Ford. Watch out here. This is bearish. You got the rejection here. That's bearish. It's now 3 p.m. $1,600. A little bit of risk-off behavior here into the close. Target downside right there. That's valid too, by the way. That's very valid right here. We have the cross on the 1 and 5 minute trigger. Next one is Ford. Ford's been through a lot of uncertainty with tariffs, uncertainty with manufacturing locations, and also the interplay with Ford and White House policy has been cloudy. On a daily basis, Ford is in major accumulation on a monthly basis. It's in major accumulation on a weekly basis. Its daily is neutral right now. I'm bearish on their report, but it's being accumulated. And I think that's important. So let's look at Ford here. Let's watch this closely here. So here's Ford right here. I think you get this break higher here. You might get $10.71 on their report. But I think you're going to back test this and get a delayed move to the upside.
US natural gas futures extend gains. Prices up 5% in post-settlement trade on lower output and higher demand forecast.
Low. Yeah. Oh, looks pretty good, right? A little bit of hair over there. A little bit of hair over there. Pretty good, right? Pretty good.
Macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Now there is something worth noting here, and that would be if we break above. There is something worth noting here on Ford. If we break above back test, see that weekly and that daily coming up? See it right there, wham, wham, then up, up, and away. Now you could make the argument that the daily trigger will cross up here. Weekly trigger will come up. Yeah, I still see it. I'm bearish on this ticker for some reason. Let me just look at this again. 1, 2, 3. 1. New high. Back test. New high. Back test. Up. Hold on here. Jesus Christ, look at that gap. Woo! That's still one move right there. Now on this Ford thing, I want to talk to you about this really quick if I can. This Ford weekly looks good on a daily basis. Daily looks like shit. And that's the concern here. The concern here is this right here. I want to show you this quickly. It's like Ford is trading. Like Ford is pricing in their move and then they're going to get dumped. So just be careful. The better way to look at this trade is just be waiting down below for the next trade on them. There's not a lot of room left on this ticker. So bearish, I guess. They're trading 1024. You might get 1084. Not a lot of room for Ford. Bearish on their earnings for a bigger move down the road to trade from 907 to $11.25, possibly $12.50. So they're getting a little long in the tooth here as well. It is fascinating to see this stuff because if this turns into that, like this is the McElligott trade where you get the good for Ford earnings up here. And then we start to like collapse down and make a new low. That would be 1, 2, 3. And then you'd get the mid-May bloodbath. So we're going to have to monitor all of this price action into the next, 2 weeks into the end of the month, into the end of May. So just pay attention to this. We're going to have to revisit this. This outward projection really matters. This stuff's really going to matter here in the month of May if we're going to sweep the low. But that's what I've got. That's what the velocity is telling me. Up, up, and away. Ultimately, price target $13 on Ford. Sell the news on Ford, in my opinion. You only got like $1.50 left or something like that. Trading 10.29. I got a target of 10.83 This is for Monday close. Not a lot of money there, in my view. What else we have here? We got the on SPY. We've got the low. We've got the rejection low right here. Looking to take this down just a little bit more. Next one we'll look at would be AMD. Advanced Money Destroyer. If you are short here, make sure your stops are right here. Stop. What is going on here? I got some wonkiness going on. What the hell is that? I don't know what the. I got some really funky. Oh well, I got some weirdness going on here. I've got some lag here from. There we go. Watch this tick right here on this gray box. Oh man, dude, they're killing it here. This is now dead. Woo. They're just like scooping up every. We're going up here now. All the way up. Just eating alive these bears. Here are your stops right here. They'll give you an opportunity to get out of your short right here. AMD, we're going to take a quick look at them on their velocity and their daily velocity. Their weekly looks excellent. Their daily looks outstanding on a daily basis. On a 30-minute basis, they're oh man, dude, they're fucking they're so I shouldn't be swearing. Their daily velocity looks like shit. And their hourly velocity looks like shit. Which is kind of ironic, isn't it? Advanced Money Destroyer. AMD is also in a bear market. It is underneath its monthly trigger. The weekly trigger has crossed the monthly trigger. And intraday, it looks terrible. It looks really bad. Like intra-week, intraday, it doesn't look good. On a daily basis, or daily time frame, on a weekly basis, it looks good, but it looks awful. On higher or farther outlooks, it looks terrible. So like I would say the short-term look is terrible. The mid-term look is good. Long-term look is terrible. So this is a toughie. It usually is a toughie. If I had to think about AMD, that now they've got a Tuesday report, right? I think AMD, man. There is a reason why it's Advanced Money Destroyer. I think you potentially get a squeeze up into the close today. But then you go to the depths of hell. on their report, a delayed reaction to the upside here. Now, there's a problem here, too. Just look at this really quick. Man, this does not look good. I think you might squeeze the close here really quickly. That could be Tuesday, too. There's a real inflection point here on AMD. So for next week's report, the report on Tuesday, I actually think you have a fairly good chance of going up into their report. Hang tighter. I got to look at this more closely, too. This is a tough one because on like the short term, I'm bullish. There's a trap in here. How do I show this to you guys here? Like, this is the path here, right? And this is the path here. But there is like a murder bot hidden in here. So you can come into your earnings and they can just fake you out and then hire. I think there's a chance of there's something in here, right? It's right here. There's this like big seller up here. You want to snip this at home, you can, but there's like a trade here for Tuesday to 104.98. But then there's like this velocity issue where they suck you down in here in their earnings, but then they release you to go higher to trade 115, 117.5. Now, there's a bigger problem here, too. Now, this would be this is the short-term outlook right here. This midterm outlook, this is July. There's another big downside move coming into September. And the future is unclear into June or into January, February in here. AMD is showing the recession trade. Delayed reaction for this. Nice big pump up into midsummer. A bloodbath. You're getting a fucking bloodbath in middle of summer here, like doom all the way back down. And that also gives you your that's gonna be a doozy. Maybe you're leaving a gap back here that I can't see yet. Maybe it's a gap that gets filled down here or something. Maybe there's some gappage or something from the summer you take out. This ticker leaves a lot of uncertainty. If we fail the end of the year trade and don't blast up into February or whatever, and they rope us in, maybe it's a delayed action in the market for that second leg down, end of year, fall. No holiday rally, that kind of stuff. It's not there. It's actually farther out. It's like here. A giant liquidity grab on this ticker. Its velocity looks like really bad.
Tariff exemption.
So short term, some fuckery. Medium term, good outlook. Long term, bad news. It doesn't look. Unless something resolves itself, looks really bad. Hopefully you got stopped out over here and you're taking the long of the trade to the upside here. AMD, bullish with enough time. There is some fuckery in here on AMD heading into their ER. That's on Tuesday close. I can't tell if you're gonna. I'm gonna assume either. I'm gonna make a posit here that AMD is going to be weak into their ER. And that's where the fuckery will come.
The CNBC cites
Look for a long on
trade group to the White House
on Tuesday close for their ER, and then you've got more fuckery afterwards. Like you trade up and hit the 116, and then it sells again into you'll trade that into like May 16th, and then you'll sell the fuck out of it, and it's gonna get blooded again. It's gonna be a bumpy ride for AMD. What else am I going to look at today? I don't have a lot of time left. It's 3:27, almost 3:30. I'll take a cursory look at Rivian, then we'll move on to Uber, Walt Disney, see what else we can get into for the rest of today. So we're going to do, next we're going to do Rivian. AMD has a lot of volatility here. It's the only way I can say it to you. It's got volatility. It's got a poor outlook long term. Midterm, the outlook looks great. Any lows that you can buy right where we are outstanding. Even with the fuckery. If you wanted to take a low on AMD for like late July and hope for a print, hope for a print between now and July, I'd say that's a worthy, but you'd have to close your laptop for that. The only caveat to that would be if general market conditions, if they deteriorate between now and summer, that would wipe that away, but that's for the whole market anyways. AMD scares the shit out of me right now for like that end of the year trade. It's like screaming, maybe everybody's wrong. We don't get that end of the year thing, or we squeeze tits off maybe. It's still showing like this, like AMD's showing that depression trade, even if it's delayed. Big. This other scary part is this monthly trigger. It still fits within the I mean, even all this price action this year, this blue line moving lower, that blue line right here, this fucker right here is just screaming. Screaming, no matter what this price action is. Big suck of liquidity and down to the depths of hell. That could be war too. I don't know. This is definitely something big. At any rate, there's AMD. Rivian, we're going to keep this one a little bit shorter. I know you're a lot of Rivian weirdos out there. Hey, we did Rivian perfect. I know, yay. Look at that. Look at how good we do these things. Rivian, let's get rid of all this. Consolidation. Rivian's been kicking ass. I like Rivian all day long. I like Rivian. Just own Rivian. Like Tyson Foods, I like it a lot. I like the ticker. Target upside over time, $20. You got some bumpiness along the way. You're gonna probably easily hit $15, 1567, and even this 1701 drawdown, and then you're gonna go higher. I like the stonk. It's one of the best ones for next week I've looked at so far. Rivian, love it. Love it. Love its positioning. Love its accumulation. Love its long-term prospects. Like the velocity on it. It's one to buy. If you're looking for a dip to buy on Rivian, it's probably going to be right where we are. 1366. Anything between right now where we are and $10, accumulate. Rivian, outstanding right now. Very happy with that stock. They've been through a bunch of hell. It probably has something to do with a trade on. A counter trade to Tesla. More than likely, it's a great fucking stock. It's looking sexy, absolutely. Now this one does have a monthly trigger coming down on top of it, but there's a caveat. There's a caveat. Like now, just like AMD has that blue trigger, it's over it. This company has already been through what AMD is likely going to go through in the future. AMD is likely, or Rivian has likely done that process already. That monthly trigger is weak as fuck, and price is going to moon higher than that blue trigger. So that price target of $20, that ain't shit. This ticker is gonna move. It's gonna make some moves. So very bullish on over every ticker I've looked at long term. Rivian's probably even better than Tyson. Tyson, Rivian, two favorites right now that I've looked at so far. So I'm impressed with surprisingly, I wasn't even going to look at it, but I like Tyson. Or not Tyson. I like Rivian the best. Excuse me. So we got Rivian done. We're going to look at Uber and next Disney. Nice ticker, by the way. I know some of you out there have been longtime Rivian bulls, and you've been through fucking hell. I can't deny that. You have been through hell. It reminds me a lot of early Tesla. I used to trade Tesla shares back in the day, way back in the day when they were nothing, a nobody company. It was a fucking nightmare. But once that ticker started taking off, man, whoo, doggy, it ran, baby. That was like some GME shit in terms of emotions and failings, and also just the down and the down and out, and the waiting and all that kind of stuff. So congratulations if you're a but what do you call it? If you're a or not an Uber, Rivian bull, your time to shine is coming to the upside. Uber, this one's kind of fun, right? Bat wings, and they have the breakout above. This is what Palantir should do. So you've got the prior high right here, right? You're coming into this right now, right? And you get the squeeze higher. This is what the expected move is right now for me on Palantir, but it's to sell the news for me to go higher. So Uber is a little bit through this already. They're already making their way higher right now. Trading $84.67. I do want to show you something here, though. You've got this prior high back here, too, a bigger target up in here. I want to show you this right here. To me, Uber is going to be a sell the news ticker as well. I want to show you this one quickly here. So for Uber next week, Uber reports before the bell on Wednesday. I think they are also a sell the news. You're going to get a pullback first next week. Then you're going to hit your target to the upside. And then you're going to get a major drawdown in this stock over here, in my view. And then you'll have continuation to the upside. So Uber right now, I just want to check their velocity really quick and just see where they're at. A little long in the tooth, pullback on tap for Monday, Tuesday. Their accumulation on a daily basis looks great. On a daily time frame for Uber, they're just getting started on accumulation. They're a little long in the tooth on a monthly basis. Their weekly looks pretty good. So this kind of matches up right now that you would see that hit higher. See it right there. And look for some kind of a pullback right here. Let me just show this right here really quick. Yep, right in there. And then you'd be looking for another extension to the upside right over here. Oh, hold on here. And then a much larger move. Whoop. This is all part of one move, so you're going to get that hit right there. And then an even larger move to the upside right here. 1, 2, 3, 4, 5. And this one will be explosive. Oh, yeah, baby. Oopsie. Looks like shit, but you get the point, right? Whoop. Gorgeous move right here. You could view this as a doom trade where they fail to get the new high. That's all set up, man. You can see it in July right here. There's this doom trade here, end of year. There really is. There's like even Uber's showing it right now. So Uber, pull back into Money Tuesday, target upside 88.56. Summer trade up to 92.86. Bigger trade higher. There is some looming shit in here. There really is. There's like there's a trap in here for the market. And that's ugly. Then you would be like 1, 2, 3, and then 1, 2, 3, 4, 5 downside. Situation unclear for Uber as well. All of this is holding just nicely and fine. Going higher into the close. Squeeze everybody out into the close today. Still looking nice and good to the upside here. Hit those upside bars in the bell. Very bullish in the close. Next one we're going to look at here is Walt Disney. Walt Disney looking great down here. Got a nice big fat low, got a higher low, got another low, got the balls going around here. You got your major market low up here, higher low right here, higher low over here. This all looks good. All forms of accumulation. Very much range bound as well for Disney. This would be my, if I had to pick a number 3 that I've looked at today, I would say my number 3 most bullish is Disney. And I even like their price right now. Let me just take a look at this really quick here. Major low, major high, inside low, inside high, new low. Hang tight. Let me look at this Disney trade really quick. Oh, yeah. Okay, so Disney is probably my 3rd favorite pick here. I'm very bullish on Disney into their ER next week, too. If they catch a pullback on Monday to $90 or $88, I like the stock. Price target of the ER is going to be a trade to like 105 or something like that, 105.96. Bulled up on Disney into their earnings, and there's a lot of accumulation going on. I'm assuming this is a recession trade. Bullish, just overall bullish on it. It's a great stock to own right now, in my viewpoint. It's an outstanding stock to own. Let me just check this really quick here.
And we have posted out the article from CNBC. Again, Nike, Adidas, and other.
Yeah, even if this stock goes to 70, it's worth owning here.
CNBC.
Trading $92. Oh, hold on here. There's a down move here for August.
And be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Top 3 stocks for me for next week right now. Currently, what I've looked at would be Tyson's okay, good. Long-term Ford looks pretty good. Some of these are like take the money and run stocks. I like Walt Disney. I like Disney a ton. There's definitely some definite like take money and run stocks next week. We'll look closer again. I like Rivian a lot too. I think Rivian is like probably Rivian 1, Disney 2, Tyson 3. You could make Ford a number 4. I haven't looked at Shopify yet. Some of these stocks I'm looking at are bullish to take the money and run. Make sure you're either in like shares and those like take the money and run stocks. The ones that are just like wrapping up right now. Or close before you get there if you're in options. I like the accumulation though of like right now I like the accumulation of Disney, I like the accumulation of Rivian, I like the accumulation of Tyson, and I like selling options against those fucking stocks. Calls and puts galore for the year, and if we have markets degradation, you could probably hold those tickers for a long period of time and feel confident and comfortable. Even Rivian of all companies, I'm shocked. Rivian, I don't think's going anywhere. So congratulations if you're a Rivian bull. What else? I think that's it that I've got right now. I'll spend more time next week. On Monday, I'll go through AMD. I'll go through Peloton, Shopify, Coinbase, DraftKings, Lyft, Pinterest, Dropbox, TerraWolf, and all those tickers. And we'll go into more detailed expectations for the membership and the Discord and on stream live. Some exact targets for next week as we grow closer to all of their ERs. I think that's it. I think that's all I've got. I've gotten through most of this stuff. Yeah, by the way, all of you guys have a great weekend. I'd like to buy some puts, but I don't want to buy anything unless we squeeze tits into the close. I guess we got our tick strike above, didn't we? We got our 5,700, so I mean, we're so fucking close. Like, look at this right here. Like, let's just look at this really quick. We got our we fulfilled what we needed to fulfill earlier in the day. We got our tick strike right here, so we're kind of done. The only thing left to be worried about would be a squeeze up to sell Monday, Tuesday. The only thing we're waiting on here is the end of the day right now. Just waiting for the close here. Like, we've done everything we need to do in the market. They ain't buying puts, though. No puts for me, not unless we crank into the bell. I already know how this shit goes. Just destroy all put hold. Like, just write a t-shirt, destroy all put holders for Tuesday prints. I should make that t-shirt. If you're looking for a Tuesday print on puts, don't buy them till 4:15. Hey, Robert M., are you a new member? Go to the web. Did you sign up at tradethetrigger.com? Robert M., did you go to the if you go to the website, you'll get asked questions. You sign up there, you get asked what your handle is for Discord. You have to make either a free or paid TradingView account. It doesn't matter. You sign up for the Discord on the website. You'll be prompted to do that. The private streams are posted inside the Discord in the market chat. We're still going to do the free live stream. It's just not going to be as detailed. Yeah, Robert. Hey, Robert, if you have any issues,
Market on close imbalance data.
Go to tradethetrigger.com and click the contact us support, and we'll walk you through the process. On MP. Hold on, brother. Ultimate Gus, you want me to do MP?
According to the Wall Street Journal, citing sources, Federal Reserve has delayed delivering secret ratings to
Oh, dude, baller, bro.
incoming Vice Chair Bowman is seeking to review bank ratings. Again, according to sources. 10 seconds to the mock.
Am I bullish on MP? Yes. Extremely bullish.
Market on close imbalance. S&P 500 buy side 2.4 billion. Nasdaq 100 buy side 1.2 billion.
Yeah, weekly looks like shit.
Buy side 750 million. And Mag 7 buy side 680 million.
Hold on here. I think there's a trap here. Let me just check this one more time.
So let's take a look at the article in a bit more detail then. So Federal Reserve's incoming top banking cop is seeking to review the confidential ratings for the health of large banks after criticizing the fact that 2/3 of the biggest institutions were deemed unsatisfactory last year. Bowman, who was nominated by Trump for vice chair of supervision at the Fed, has been expected to bring a lighter hand to bank regulation if she's approved by the Senate for the job. In a February speech, she questioned the Fed's recent supervisory ratings, saying there was an odd mismatch between the central bank's view of the financial condition of the largest banks and the unsatisfactory ratings it gave many of them last year. So just a reminder, the Fed hasn't yet released new supervisory ratings for US bank holding companies with $100 billion or more in assets, according to people familiar with the matter, even though it typically shares the ratings privately by the end of March. The Fed is planning to wait until Bowman is confirmed by the Senate for her new role, according to what some of the people said.
Okay, MP. We're going to talk MP really quick. MP is weird. It's got a it looks like it took a lot of work for MP to get where it is. Its daily, weekly velocity looks like shit. No, hold on here. I might be wrong here. Hold on. Yeah, its monthly looks like crap too. There's MP, believe it or not, in my view, has a no, that looks good too. That looks good. Hold on. I might be wrong here. Hold on. It's really weird. There's like a hold on here. MP is weird. It's like MP's ER looks great. There's a trap to go lower before a breakout. I think their ER will be good. Let's check this really quick. Yawn. Let's go look at this stock really quick. This is a difficult one. This one is not easy. This is MP. I want to show you what makes this one fascinating to me. On a daily basis, this is bad. Ish. It's bearish on daily velocity on a daily basis. It's losing ground as well on a it's losing ground on a weekly basis. The monthly looks okay, but it looks like it wants one more dip too. Now on like bigger time frames, there's a trap in here. There's like a bullish, ER and stuff and more higher highs, but there's a big sweep down here, and I don't know what that is. A huge flush. And you got a giant gap down here and a giant gap down here that haven't been cleaned up. And I don't know the reason for that. I'm assuming this is it's got to be something that we don't know. It still resolves to the upside in a big way. But let me show you this on a higher frame here. Like I think it's extremely bullish, but got like 1, 2, 3 maybe. You kind of beat that high. You kind of beat that high. There's like something down here. And I don't know why this persists here. Like this all looks good, but within this, see like the velo matches that these are going to get closed at some point. That's going to get closed. They're going to close this shit, and I don't know when it is. I don't know if it's over here. I don't know if this is in August. It's another one of those tickers that are showing like, even if it's just a wick. And I can't tell if it's in here either. Like, there's something going on in here. I can't tell if it dumps and then makes its way higher, even though that's a new low. Velocity is telling that story right now. Something in there. You see that shit? Shit's still there. Nope, that's fine. There's something going on in there. You've left that behind invariably. You don't care about that gap right now? We're coming back for that someday. You're leaving that gap behind too. We can leave gaps behind. I've seen it happen. Bullish. The only thing that I would tell you about this stock is that the only thing I would tell you about this stock is that velocity is hiding something in here, and I can't tell what it is. You got a series of higher lows here on a daily basis, on weekly, and you've got monthly growing here. You can see it right here. You can see it. It'll show itself in here, and then there's like a collapse in here of some kind. There's something funky going on here, like this right here. I'll look closer at it. Let me look into it. MP is a good one. MP is a really, really good one. There it is right there. There it is right there. It's ultimately bullish. I'm not like anti-MP. I'm bullish on the company and their ER. I don't. God, look at that squeeze right there. I got to look closer at it. You got a lot of barcoding in here, a lot of range trading in this one. I would say stay long. If you ever get a chance to close $12, buy it. You ever get a chance? I mean, let's just say keep accumulating it. All right. 4 p.m. No squeezing, baby. No squeezing. They leave the gap up maybe for the weekend here. I'll see all of you guys on Monday, 9:30 in the morning. This week, I'm streaming live on Monday. Usually it's an office day. I've got no appointments on Monday, so I'll be here with you on Monday. Although next Friday I do have doctor's appointments, so just note that for next week. I want you all to have a wonderful weekend. Get outside, do something, get some sun, talk to people, blow off all that craziness that's you're picking up across the markets and outside on doom